Hello, all the viewers. Good morning. Welcome to our Team CASA channel. And today's webinar is on Ind AS. Some two different topics related to Ind AS. First topic is our valuation principles while preparing Ind AS compliant financial statement. जब भी आप Ind AS compliant financial statement बनाने जाते हो तो कुछ valuation principles आपको follow करने होते हैं. आज इन वैल्यूएशन प्रिंसिपल्स के बारे में डिटेल गाइडेंस डिटेल नॉलेज हमें मिलेगी सीए अंकित कौशिक जी से. सीए अंकित कौशिक जी का ब्रीफ इंटरव्यू मैं देना चाहूंगी, ब्रीफ इंट्रोडक्शन. तो अंकित सर actually has a vast experience in IFRS. He has done diploma from UK and he has also done valuation certificate from ICAI. So Ankit sir has a experience of 9 years post qualification and he's working in a US based MNC. So along with Ankit sir, हमारे साथ अनिल सर भी हैं. सीए अनिल सीए अनिल चाचरा. तो अनिल सर हमें गाइड करेंगे Ind AS 16 पे, which is related to property, plant and equipment. Ind AS की applicability property, plant and equipment पे क्या होगी और किस तरह से आपको Ind AS 16 फॉलो करना है, ये अनिल सर हमें गाइड करेंगे. तो अनिल सर का इंट्रोडक्शन, अनिल सर का ब्रीफ इंट्रो मैं यहाँ पर देना चाहूंगी. अनिल सर हैज अबाउट 14 years of post qualification experience and he has also done LLB along with CA and also done diploma in IFRS from UK. सो अनिल सर और अंकित सर के साथ साथ आज हमारे साथ विद वास्ट एक्सपीरियंस विद ग्रेट एक्सपीरियंस हम सीनियर एक्सपर्ट हैं जो है सीए सुरेंद्र कुमार गुजराल जी. एस के गुजराल सर से मैं गुजारिश करूंगी कि आप ये हम जो आप आज का वेबिनार करने जा रहे हैं तो आप एक ब्रीफ वेलकम रिमार्क्स प्रेजेंट करें व्यूअर्स के आगे. देन वी कैन जस्ट स्टार्ट द वेबिनार विद सर जिनका फर्स्ट सेशन है आज का. एसके सर, ओवर टू यू. एसके सर, एम आई ऑडिबल टू यू?
अंकित जी.
यस सर.
हाँ जी, चलें शुरू करें.
यस सर. सो Priyanka is asking some introduction welcome note from your side. If you can put some light on that. Welcome note, sir.
हम जी.
Sir, brief welcome note from your side as you are senior expert in today's webinar.
अनिल जी, अंकित जी, आपका बहुत-बहुत स्वागत है. We are running this program for CASA and this is the third in the series and we have already covered what is the overview of the IFRS in India, Ind AS in India. और पिछली बार डॉक्टर रावत आए थे, उससे पहले आलोक गर्ग जी आए थे. तो अच्छा, उन्होंने एक उनके और कुलीग हैं नाव्या अग्रवाल, उन्होंने 2 बार में बड़ा अच्छा अपना प्रेजेंटेशन दिया है. So we are taking it forward now. And today's we will be covering topics on the fair valuation, I think, valuation standards,
right.
and PPE. So welcome, sir.
Thank you.
Thank you so much, sir.
जी.
Hi team members, my esteemed members, panelists and students. I warmly welcome to all of you for discussing this important topic on fair valuation while preparing Ind AS based financial statements. So briefly, I would like to tell you, valuation is not something on the financial statement. It has a vast area and it's the independent subject for which various kind of valuations are done. So in the financial statement, we do valuation for presenting in the financial statement. First of all, let's understand what is value. Brian Dyson has rightly said, value has a value only if it is valued. So that means value is not something like price. Price may be different than value. That's why we say it is undervalued or overvalued. Based on the value, we make some various kind of decisions like business sale, purchase, and tax calculation, valuations, and various other. But our topic today for discussion is on the financial reporting, how we can do the fair valuation when we present our financial statement. For example, if we are applying Ind AS 9, it says about to do valuation for certain equity, debentures, bonds, but it doesn't tell you the principles how you do that. That is being defined in Ind AS 113. And we will cover in our discussion why this valuation is being done, how it is being done, what are the disclosure requirements, and various kind of principles which are described in Ind AS 113. First of all, I would like to tell you why this standard is issued separately. Because before this standard, there was a different approach in described in various IFRS, which was not consistent. So to bring that together, this Ind AS is being issued to gain the consistency in the financial statement. So let's start with the presentation. Let me share my screen.
सर 1 मिनट मैं एक शेयर करूं कि यू आर लाइव नाउ, पीपल आर सीइंग यू इन रशिया, UAE and Dubai, sorry, Saudi Arabia. My colleagues, they are more interested कि इंडिया में क्या हो रहा है, तो they are viewing आपको.
यस सर, बिल्कुल. अभी सर हम अपनी प्रेजेंटेशन में वो सब कवर करेंगे कि इंडिया में कैसे प्रैक्टिस चल रही है, व्हाट आर दी इंडियन सिनेरियोज, इंटरनेशनली क्या हो रहा है, इंडिया में क्या हो रहा है, और हम किस तरीके से प्रैक्टिकल चैलेंजेस फेस करते हैं व्हेन वी प्रिपेयर आवर फाइनेंशियल स्टेटमेंट, क्या फेयर वैल्यूएशन होती है, क्या मेजरली प्रैक्टिकली हमें क्या क्या अप्रोच लगानी पड़ती है. वी विल डिस्कस ऑल इन आवर प्रेजेंटेशन. आई होप यू एबल टू सी माय स्क्रीन.
Yes, yes.
Okay, so our topic for discussion is valuation principles. Now the agenda for presentation would be it is categorized in 3 parts. First, we will cover introduction to valuation. Second, we will cover in detail what is Ind AS 113 and what are the principles to apply for fair valuation. And then we will go to the practical challenges and practical scenarios for doing valuation of particular financial asset and financial liabilities, or also non-financial asset and non-financial liability. Of course, we will discuss what is financial and what is non-financial. So now let's start with our first part, which is introduction to valuation, wherein general principles are described, like what is the purpose of valuation, why fair valuation is being done in our statutory reporting, what is the Indian regulation in valuation. So let's start. On the introduction side, just to touch briefly on the purpose for valuation. There are various purposes for which independent valuer is being hired, and that he gives the valuation report based on the assumption. Like merger and acquisition, if any company or any unit is sold or purchased, or fund is raised from private venture, private equity, then we do the valuation, not the financial reporting valuation. It's a separate professional valuation. If we want to secure some funding, for example, hypothecation of then we do that valuation separately. There are critical partnerships for which terms and conditions are defined based on the valuation practice. For that, these valuation are generally happened in India. Of course, there are tax perspective as well. For example, Section 54 of Income Tax, and also stamp duty, which is based on the valuation. So tax collection is for the tax collection purpose. We also do value. Of course, for our risk management, if the asset or liability is very critical for our business, so we should know the real value of that asset so that we can make the hedging or we can insure that thing. For that purpose, valuation is also done. For the long-term business plan, if the business has some objectives, if, for example, business has a fair value or market cap 100 million, they want to reach to 500 million. So they set some assumptions, some principles calculating that 100 million, and then they will apply down the line 5 years to see whether the business grows based on the current assumptions. So on that basis also valuation is being done. But yes, these are the things for the decision making and whether statutory or non-statutory purpose, management decision purpose. But for our purpose, what we do is a financial reporting purpose valuation, wherein we calculate the fair value of particular unit of account, which is asset or liability. Right. So we are concerned here only for financial reporting purpose. We have the annual report wherein we see the various kind of asset and liability at fair value, how that is being done. That is our area to cover in this presentation. We are not touching other things on which we need to make some decision or not. We are only covering Ind AS 113. Valuation is a very vast thing, and it's like an art. It may happen one person doing valuation for one thing, the other person doing valuation differently for the same thing. So it depends mainly on the assumptions and the condition and circumstances that our independent valuer is applying at that particular time. Now let's cover how it happens in India. So as we all know, there is a autonomous government body, IBBI, which is in Insolvency and Bankruptcy Board of India, who regulates the valuation profession as per Companies Act 2013. There is a prescribed course done by the person who can only do the valuation, and it is being regulated, and the valuation standards are being issued by IBBI. So that valuation valuer, professional valuer, may do valuation for any kind of thing, maybe statutory or non-statutory purpose or decision-making purpose. But yes, we can also hire them if the valuation is complex for a financial reporting purpose. Otherwise, there are various areas for which an accountant or auditor can help to do that fair valuation. So many of the cases do not require the professional valuer services. We only require if the circumstances demand. For example, if it is a property, we do not have an expertise on that property, so we may hire a person who has a depth knowledge for real estate. So this is the Indian scenario. But if, for example, if we have shares in a venture which are listed in the share market, for that, an accountant and auditor can do that valuation based on certain assumptions. We will cover how to do this valuation. Going to the next, why this fair valuation is done. The simple purpose is, as you know, fair valuation helps us to make the decision. For example, if we have some land which is of 50 lakh in the books, and the real value of that land is 5 crore. If we present the land at 50 lakh, so 4 crore 50 lakh will be not visible to the shareholders, the stakeholders, and all other parties. That company financial statement will show it undervalued because we are not valuing that as per fair valuation. So the historical cost may not be a true representation for financial reporting. That's why Ind AS or IFRS focus on doing the fair valuation in various scenarios. So now, in our agenda, we have covered introduction to valuation, the Indian scenarios, purpose, and why this fair valuation is done. Now we will touch upon in IFRS or Ind AS what does that standard says, how to do that valuation, what are the objective and definition, and how disclosure requirement and all other things goes. So that's what we are now going to discuss. First of all, when fair valuation are required. एक्चुअली हमारा जो वैल्यूएशन इंड AS 113 है वो ये नहीं बोलता कि आपको वैल्यूएशन कब करनी है. That is being defined in various IFRS. For example, Ind AS 109 it says fair valuation at through P&L or OCI. And but how to do that? We need to come back to Ind AS 113 framework. How that principles are being defined. अगर हम कोई इम्पेयरमेंट कर रहे हैं, दैट इज Ind AS 36, लेट्स से इम्पेयरमेंट के लिए आपको फेयर वैल्यूएशन करनी है, लाइक हमें जब वो रिकवरेबल अमाउंट निकालना पड़ता है, वैल्यू इन यूज, तो वी हैव रिकवरेबल अमाउंट एंड नेट रियलाइजेबल वैल्यू विच एवर इज हायर। तो नेट रियलाइजेबल वैल्यू कैसे निकलेगी वो हमें Ind AS 113 बताएगा, बट वो कब निकालनी है वो हमें इम्पेयरमेंट के प्रोविजंस बताएंगे Ind AS 36। तो वही यहाँ पर हम बोल रहे हैं कि आप वैल्यूएशन जब फेयर वैल्यूएशन करोगे तो कैसे करनी है वो आप Ind AS 113 को रेफर करो, बट कब करनी है वो आप पर्टिकुलर IFRS को कवर करो, Ind AS को कवर करो। नाउ द क्वेश्चन इज कि कौन कौन से ऐसे Ind AS हैं जहां पर हम बोलते हैं कि ये Ind AS हमें गाइड करते हैं कि हमें फेयर वैल्यूएशन करनी चाहिए। तो हियर इज द स्कोप कि these are the various IAS or IFRS or Ind AS wherein it suggests us to do the fair valuation. For example, PPE, we have IAS 13, which says cost or revaluation method. If we have an accounting policy to do the value, to do the PPE valuation at fair value, then we will apply the Ind AS 113 principle. It's a non-financial asset. So now let me tell you financial and non-financial. The simple classification between financial is it can be identified in determinable amount of money. If something is not identified in determinable amount of money, that is non-financial. For example, we have shares, debentures, they have determinable amount. We will get that. But machinery, property, they cannot be in determinable amount because that is for our use purpose, not for selling. So non-financial is our property, furniture, car, and various other things like machinery and all. But financial things are share, debenture, bonds. Like majorly financial assets are covered in Ind AS 109. So you can see, of course, there are disclosure requirements in Ind AS 113. When disclosure of that particular thing is required, that is also being mentioned. Like for IAS 16, the disclosure as per Ind AS 113 also required. Intangible assets, if you are valuing that at valuation method, then we will apply Ind AS 113. But when to do that valuation, you need to refer that IAS. Ind AS 113 will not tell you when you want to do the valuation. IFRS 3, IFRS 5, IFRS 9, IS 19, employee benefits. You can see the areas which is being mentioned here when you want to do that fair valuation. What are the scenarios to do that fair valuation? In employee benefit, you calculate fair value plan. For that, disclosure requirement are not applicable as Ind AS 113. But yes, if you want to do that fair valuation, you need to apply Ind AS 113. For the financial instrument, it majorly says you to do the fair valuation for various kind of financial instruments through P&L or through OCI. You need to apply Ind AS 113. But yes, it's not like every fair valuation will be done as Ind AS 113. It is not the case. You can see in the remarks section, there are some areas which are scoped out. Means Ind AS 113 will not be applicable even though IFRS ask us to do the fair valuation. For that, we need to refer guidance referred in the particular IFRS or Ind AS. For example, IS 2, Ind AS 2, which says about inventory. You know the general rule, cost or net realizable value, whichever is low. For the net realizable value, if we apply this Ind AS 113, this will be wrong. We need to apply the general principle mentioned in IS 2. So Ind AS 113 will not be applicable on Ind AS 2. Similarly, IS 36, which talks about value in use for impairment, wherein you will apply the general principle mentioned in IS 36, not Ind AS 113. IFRS 2, which talks about the employee share-based payment, where you calculate the fair value of particular shares and securities, which is being issued to employees vesting date. For that, you will not apply this Ind AS 113 because that valuation will be as per Black Scholes model which is defined in IFRS 2, you will not apply Ind AS 113 there. Also, like in IFRS 16 leases. For example, you have a lease. You acquired a land for 50 years on over lease. So you have that asset as return right of use asset at cost in your financial statement, but you have a policy to revalue that at fair value. So for calculating fair value, although that is a non-financial asset covered in IFRS 16, but you will not apply Ind AS 113. You will refer only IFRS 16 principles to calculate fair valuation on return of asset, right of use asset. So you need to be careful while you apply the Ind AS 113 because there are some exceptions and there are some areas which are defined in the particular Ind AS when you will refer this Ind AS 113. And also the valuation principles will be different for financial and non-financial assets. There are two classifications while you do the valuation in the Ind AS 113. So now, till now, we are covered when this fair valuation is done, refer the IFRS, how it is done, refer Ind AS 113, what are the scope where we need to refer this Ind AS 113, you need to refer this list. Of course, this is not an exhaustive list, this is an indicative list. There may be scenarios you need to do valuation and you need to see when that valuation is required at that particular IFRS. This is only for your reference, like these are the instances where you need to do the fair value. So we are covered in two parts. So let's move to the next objectives. Now, what is this Ind AS 113 actually specifies? What are the objectives? What do you achieve by applying this Ind AS? So first is it defines the fair value. We always talk about fair value, but what is that? But how it defines that? How do you like understand the core principle of that fair value? It is being defined in Ind AS 113. The framework means how you will apply that. So whenever you are in the practical scenarios, you will be whether you will be having machinery, property, and you will be having furniture, car, share, debenture, security, mutual fund, be it anything, investment property, IS 41. You have, for example, if you are in a agriculture industry, you will have biological asset as per Ind AS 40. So you need to apply the fair valuation on that livestock, like for example, homes and all. But I mean to say, this IFRS is being applied exhaustively whenever you uh, uh, need to apply the fair valuation. So framework define how you will do the valuation at a particular scenario. And as I said, this is an art. So majorly valuation assumptions and valuation circumstances, conditions. These are the big factor while you're doing the valuation at a measurement date. That is all being documented, and based on that, you should report in your financial statement. Now about the disclosure. So as a layman, as a user of financial statement, how would you show that you valued something? So that is being defined in the notes to account. What are the things you need to mention in the notes to account so that a person, a decision maker, should need to see that and accordingly make the decision whether to invest or not, or whether to give the loan or not. So disclosure is also very important, and which is defined in India's government. Right now, this fair value. Let's talk about it. Let's understand in a more easy way. Fair value is the amount which you will get. Means it's an exit price you will get by selling the asset in an orderly transaction between market participant at measurement date. There are three things here. You will get means it's an exit based price model. It's not like a buying price. It's not buying price. Exit price. you will get by selling that security or asset or anything. So it's an exit. Whenever you sell, you will do fair valuation कि मैं उसको जब सेल कर रहा हूँ मुझे क्या प्राइस मिलेगा. Second thing is orderly transaction. That means orderly means कि जो पर्सन उसको बाय कर रहा है या सेल कर रहा है, जो दूसरी पार्टी, उसको सारी मार्केट की इंफॉर्मेशन है उस एसेट के बारे में, सारे उसने पूरी रिसर्च, पूरा उसने उसके बारे में सब कुछ पढ़ रखा है, उसको सारे उसके कंडीशंस पता है, अगर कोई डिफेक्टिव है या कुछ भी है, सारी चीजें पता है, उसके अंदर क्या उसके कैरेक्टरिस्टिक्स है, ही इज अवेयर अबाउट दैट. ऑर्डरली ट्रांजैक्शन, कोई चीज छुपी नहीं है, सारी चीजें बिल्कुल एकदम ट्रांसपेरेंट. मार्केट पार्टिसिपेंट इज अ वेरी इंपॉर्टेंट. मतलब यू नोट फॉर द एंटिटी. आई एम एन एंटिटी. मुझे आज अपने मोबाइल की वैल्यूएशन करनी है, तो मैं नहीं देखूंगा कि मुझे मेरे लिए मोबाइल क्या वैल्यू रखता है. आई विल सी कि दूसरे बंदे को, दूसरे पर्सन को, इफ ही वांट्स टू बाय दिस मोबाइल, देन व्हाट इज द वैल्यू इन हिज आई. So market participant should be unrelated. He should be capable. He should be able to buy or sell it at measurement date. That is very important thing, at measurement date. So you do the valuation at each financial reporting date. So for example, you have a reporting date for 31st December. So you are doing valuation at 31st December based on some assumption and condition. And some conditions happen, like the pandemic happened. If pandemic happened in February and March, so the share market crashed and the share securities are like decreased by 50-60%. Now what would you do? You will revise your fair value, your share security at 31st December. You will not, because this is at the measurement. The event after reporting date, which is Ind AS, event happened after the reporting date. That is applicable on the accounting side, but this is a valuation. So here you will give the disclosure, but yes, the amount to be reported will be based on the measurement date. The subsequent activity cannot change my fair value. Otherwise, there is no purpose for valuation. अगर वो बार-बार चेक कंडीशन से चेंज होता रहेगा, तो किसी भी डेट पे मैं नहीं बोल सकता कि किसी एसेट की वैल्यू कितनी. So it's an exit page definition. There are 3 criteria. इस डेफिनेशन को समझना बहुत जरूरी है, अदरवाइज हम कभी फेयर वैल्यूएशन कर ही नहीं पाएंगे. This definition let us know what is the framework, हम किस तरीके से एक एसेट को देखें ताकि हम उसकी फेयर वैल्यूएशन कर पाए. Of course, this is the reporting purpose definition. It may happen कि कोई decision making या statutory purpose के लिए there may be different definition, but for our financial reporting purpose, this is the definition which we should follow every time whenever we are doing fair valuation. The entity base is not an entity based definition, it's a market based definition. It's transparent, should not be unrelated party there, and it is an sale based definition, not a buyer based definition. These are the basic things which we should know while doing the fair valuation. These are the 3 factors which we have already discussed: quarterly transaction, market, measurement date. Should be very important. So please, because our discussion will be very important if we able to digest this definition. Now, at initial recognition, whatever transaction happens, we need to record in our book. So that is at the transaction price. So may it happen like अगर हम कुछ रिकॉर्ड कर रहे हैं वो फेयर वैल्यूएशन पे ना हो, तो मतलब हमें मेजरली ऐसे सिनेरियोज नहीं दिखते. अगर मैं आज मोबाइल परचेज कर रहा हूँ, आई एम बाइंग iPhone, it has a market value of 70,000 and I'm buying from the market. I'm a prudent person. I will buy 70,000 only. I will not buy at 1,000 and 30,000. So generally it is presumed that whenever transaction happen, that is happen at the fair value and that is recorded at the transaction price. But there may be scenarios where transaction price is not indicated of fair value. For example, I am buying from my brother this iPhone. He purchased it for 70,000. I am buying it for 40,000. There is a biased transaction there. So what do I do? I record at 40,000 or should I record for 70,000? Here, this Ind AS applies. It says if the amount is biased at the initial level, you need to record the fair value even at the initial recognition because the transaction is biased. There may be n number of scenarios. Market is controlled. Is a transfer restrictions. So on that areas, you need to identify the true fair value of that asset, and whatever be the profit and loss. In my case, 30,000 is the profit. I will directly take it into the P&L. तो इस केस में मेरी ट्रांजेक्शन बायस्ड है, इसलिए मैं उसको उतने रेट पे फेयर वैल्यू पे ही रिकॉर्ड करूंगा एंड द रिजल्टेंट प्रॉफिट एंड लॉस विल बी इन द इनकम स्टेटमेंट. ऑफ कोर्स देयर मे बी गाइडेंस कि वो ओसीआई में जाना चाहिए या P&L में जाना चाहिए. For that we will refer the particular IFRS, but this IFRS is simply clear. You need to expense it off. You need to calculate the fair value at initial recognition level as. So before to go on that, let me come back. Now you can see in my index we have covered when fair valuation required, scope, objective, definition, and fair valuation at initial recognition. Now here comes how to do that valuation. Now you are in the field. You are doing the valuation. Now how you fight with the things and how to do that fair valuation. Now we'll be covering that. But you should be clear for these things before you not aware about that. You cannot do the fair valuation anything because you as an accountant or as a valuer, you are a professional person, so you should see all the things on the professional level and do that valuation. Now let's cover how to do fair valuation. Then after covering this Ind AS 113, we will see the practical scenarios, what happens in our practical life, how do we deal with that. Now here comes how to do fair valuation. As we already discussed, there are two categories of asset. One is financial, another is non-financial. Financial means share, securities, bonds, mutual funds, be it anything, derivative, hedging security, everything. Fair valuation is being done for everything. They are financial assets or liability. So for that, how we will do the valuation? For financial asset, you will see the active market. Active market means principal market or most advantageous market. Now here's the line. Firstly, this Ind AS says you need to see the principal market. Principal means prime market, where most of the transaction happens. For example, we have the securities shares for Reliance, and they are traded in BSE, OTC, and NSE. We will see where is the most trading happens. It happens in NSE. Trading volume is more in NSE, so we will apply the NSE as the principal market. It may happen for mutual fund also, where it is the trading most. Which, for example, if we are issuing some derivative with some forward contract with a bank, so which bank has a more volume of that derivative? We will refer that. There are n number of scenarios for which you need to receive what is the principal market for that. There may be scenario there is no principal market. Everyone is doing that derivatives. Everyone is dealing in mutual funds. Everyone is issuing bonds, debentures. So then what to do? We will see the most advantageous market. So whenever you are going to sell that thing, where you will get the most benefit from that security or any shares, preference share, anything. You will see the most advantageous market at the time if the principal market is known. Now, what is most advantageous? That you will cover major factor कि आज कंपनी मेरी दिल्ली में लिस्टेड है, मेरी जो कंडीशंस हैं वो क्या है, सोना की कंडीशन चल रही हैं, मेरी जो अगर मैं जाता हूँ मेरी मुंबई में अगर मैं इस चीज को जाके बेचूंगा मेरी ट्रांजेक्शन 10,000 लग जाएगी और मुझे मेरी ट्रांसपोर्ट कॉस्ट भी होगी, मुझे वहां जाके बेचना पड़ेगा. So all these factors will be considered, like transport cost and transaction cost. Both factors will be considered in the fair valuation. Because valuation happened at a particular time for the particular unit of account. So for that, you need to see all the terms and conditions for that particular asset and liability. So that is the general principle for financial asset. Now on the non-financial asset, we do not see any principal or most advantageous market for that. Non-financial are land, building, machinery, car, furniture, computer, maybe n number of things. Now, how to do that highest and best use market? What is that? It says you need to see how will you able to get the maximum benefit from that, irrespective what is the entity purpose. Let me give you a simple example. I have acquired 100 acres of land. Company has acquired 100 acres of land, and they want to build a factory and produce some iPhones, some mobile phones. Now in the same market, they want to do the fair valuation. Now a valuer would see this is being used for the factory purpose, but if it is used for the residential purpose, the units are prepared and approvals and transaction and transport cost is being incurred. But it's the highest and best use, whether it is for factory purpose and whether it is for residential purpose. So both will be compared and see when we are getting the highest value. And if we are getting highest value for residential apartment, then that will be a value for this non-financial. So it is unbiased from the company objective, how company is using that. It is based on the how you are best utilizing that product, based on the market participant approach. You are not doing for the company level. You're going to the market participant eyes. You're not seeing. So that's the rule for highest and best use, the non-financial asset. There are a number of scenarios like investment property, IS 41. We have biological assets. We'll see if we are, for example, we have a poultry farm. How we are utilizing whether or for ag. So there are a number of scenarios. But yes, at the initial level, we presume that company is utilizing that asset at highest and best use, unless it is being challenged. Right? So that are the basic principles when doing that valuation. Now for the financial liability, these are, but whenever you go for the financial liabilities, non-financial liabilities, both are same thing. For that, you will see how you are going to sell that liability without a settlement or cancellation. Simple example: I have raised bonds to the in the market that has been traded. Now, जो bonds हैं, अगर मैं किसी थर्ड पार्टी को सेल कर दूं कि आप ये कर दो, मैं आपको गारंटी देता हूँ जो भी आप पेमेंट करोगे मैं आपको पेमेंट कर दूंगा उसकी. Now here it has the known performance risk, credit risk. For example, अगर Reliance आज इशू करता है अपने शेयर अपने bonds that has a more worth, so known performance risk and credit risk is very less. So valuation will be at par or below par as well. But if that bonds are issued by some like some low reputed person, so that carries more risk. क्योंकि for example मैं अगर वो bonds buy करता हूँ liability वाले पे करने के लिए, then I have a risk कि मुझे अगर कंपनी पे नहीं करेगी तो मुझे अपनी जेब से पे करना पड़ेगा. So to carry that risk, there is a premium attached. That premium we need to consider for calculating this financial liability. And also, we have some credit rating agencies, CASA and other rating agencies which provide rating AA. What is that? That is credit risk for particular. That is considered for doing that calculation for particular financial liability. Financial liability may be anything, bonds, share of a particular company. How would you value that? We will cover in our practical scenarios. How will you calculate particular liability? But here the main point to understand is what is the market which is being considered for financial asset, non-financial asset, and non-financial financial liability. I hope it's clear. We will see the practical scenarios as well. कि अगर आप as a valuer को value करते हो किसी भी unit of account को, so how would you do that? And of course, I will also refer one thing. Unit of account, which means asset liability or group of asset liability. Unit of account may be business as well. Unit of account may be CU, cash generating unit as well. That has not been defined in AS 113. That is defined in the other IFRS or Ind AS. This is simple Ind AS. This is the how to valuation. Other thing कि क्या वैल्यू करना है, कैसे क्या वैल्यू करना है, कब वैल्यू करना है, वो सब दूसरे IFRS आपको बताएंगे. Now, these are the premises for financial asset, principal, most advantages, highest and best use. And financial liability, आप credit risk होगे कंपनी का ही क्या risk है, according you will do the valuation. Valuation valuation approaches. Now here there are some approaches जो आप अपना valuation जब करोगे तो you will put in on that. First of all, these market approach, cost approach and income approach. Now मुझे अपनी property या फिर मुझे shares की valuation करनी है. I will look these things in the three angles. Market approach कि आज में की डेट में अगर मैं वो मशीनरी परचेज करता हूँ तो क्या उसका प्राइस होगा, कितने में मैं उसको बेच पाऊंगा. दैट इज अ मार्केट अप्रोच. फॉर एग्जांपल अगर मेरे शेयर मैं कैरी कर रहा हूँ, दैट इज ट्रेडेड इन द एनएसई, तो क्वोटेड प्राइस भाव कॉपी तो जो वो प्राइस मुझे मिलेगा दैट इज अ मार्केट प्राइस which is outside of entity. मतलब now here comes, you have generally seen कि Ind AS 113 बोलता है observable inputs, non observable input. ये क्या है? Observable inputs क्या होते हैं कि जिसमें कंपनी का से नहीं है, कंपनी की assumption नहीं है, सारे एक्सटर्नल कंपनी के आउटसाइड इनपुट से हम कुछ चीज कैप्चर कर रहे हैं, लाइक शेयर्स जो ट्रेड कर रहे हैं, दूसरा पर्सन कितने में वो सेल कर रहा है, वो ऑब्जर्वेबल इनपुट है. उसमें कंपनी का कोई भी बायसनेस नहीं है, तो दैट इज ऑब्जर्वेबल. अनऑब्जर्वेबल वो है जिसमें कंपनी कहती है कि हमें तो कुछ मिल ही नहीं रहा, मार्केट में कोई इन्फॉर्मेशन ही नहीं है, तो हम अपने कुछ असम्पशन लगाएंगे, कुछ प्रिंसिपल लगाएंगे, कुछ हम उसमें डिस्काउंटिंग अप्रोच करेंगे, कुछ ऑप्शन प्राइसिंग करेंगे, तो वो कंपनी अपने कुछ असम्पशन से कुछ कैलकुलेशन कर रही है. दैट इज अनऑब्जर्वेबल इनपुट. तो ये वैल्यूएशन जो अप्रोचेस हैं जो आप इनपुट यूज करते हो, आपके जो एक तरीके से जो कच्चा सामान, रॉ मटेरियल से आप एक फिनिश्ड गुड बनाना चाह रहे हो, अपना वैल्यूएशन करना चाह रहे हो, तो वो रॉ मटेरियल क्या है, आपके इनपुट. वो इनपुट्स क्या होंगे, उसके बेस पर ये अप्रोचेस डिसाइड होती हैं कि कौन सी अप्रोच आपको लगा. लाइक मार्केट अप्रोच जो है वो बेसिकली मोर ऑन ऑब्जर्वेबल इनपुट है कि आप अगर किसी भी एसेट को या लायबिलिटी को वैल्यू करते हो तो बाहर उसकी वैल्यू क्या है. कॉस्ट अप्रोच हमें बोलती है कि अगर आप मार्केट से कुछ नहीं मिल रहा, मुझे मेरे पास कोई मशीनरी है जो मशीनरी बिल्कुल एकदम बिल्कुल यूनिक है, मैंने उसको अपने अकॉर्डिंग बनाया हुआ है, मैंने अपनी सारी इंस्टॉलेशन की हुई है, उस पर रिस्ट्रिक्शन भी है, 20 साल तक मैं उसको, मुझे आगे एनवायरमेंटल भी उसको ठीक कराना पड़ेगा. उस केस में मेरे पास मार्केट है ही नहीं, मैं उस मार्केट में बोल नहीं सकता ऐसी मशीनरी बिक्री है, वो स्पेशलाइज मशीनरी है. नाउ कम्स अ क्वेश्चन कि अगर आप मार्केट अप्रोच में नहीं जा पा रहे, देन यू कम टू द अप्रोच कि अगर आप सेम सेटअप आज के फिर दोबारा सेटअप करते हो, देन व्हाट वुड बी द कॉस्ट. आप नहीं खरीदोगे, उस पे डेप्रिसिएशन 2 साल का लगेगा, आज के करंट रेट पे आप ये सारी चीजें आज के करंट प्राइस पे लगाओगे, देन व्हाट वुड बी द कॉस्ट दैट पर्टिकुलर सेटअप, वी कैन से दैट इज द कॉस्ट. ऑल्सो इसमें भी हमारे मोर ऑफ ऑब्जर्वेबल इनपुट है, बट यस इट्स अ मिक्स ऑब्जर्वेबल एज वेल एज अनऑब्जर्वेबल इनपुट. The third approach is income approach. It is more on the unobservable input. इसमें हम डिस्काउंटिंग, ऑप्शन प्राइसिंग, फ्यूचर कैश फ्लो, मतलब प्लानिंग्स वगैरह सब करते हैं, क्योंकि इसमें हमारे पास ना तो पता होता है मार्केट में क्या चल रहा है, ना हमारे पास कोई इसकी कॉस्ट होती है. फॉर एग्जांपल मेरे पास अकाउंट रिसीवेबल है, मुझे इसकी फैक्टरिंग करनी है, So I don't have any market or cost for that. I need to apply the income approach. कोई मशीनरी स्पेशलाइज है जो मार्केट में बिकती ही नहीं है, I cannot do anything. मैंने सेल्फ है तो उसके लिए मुझे इनकम अप्रोच करना, सेल्फ जनरेटेड एसेट्स उसके लिए मैं इनकम अप्रोच लगाऊंगा. तो these are the approaches which is of course मैं ये नहीं बोलूंगा कि पर्टिकुलर एसेट के लिए कौन सी अप्रोच बेस्ट और कौन सी नहीं है. That it depends on the judgment of that particular accountant or valuer. तब उस पर्टिकुलर सर्कमस्टांस में देखा जाएगा कि क्या उसके मार्केट फैक्टर्स हैं, उन फैक्टर्स को कंसीडर करके ये अप्रोचेस लगाई जाएंगी. देयर में भी सिनेरियो की दो अप्रोचेस साथ में लगती हैं, दोनों अप्रोचेस जो उस टाइम पर एक जजमेंट लग रही है कि ये सही होना चाहिए वो हो रहा है. तो इट्स नॉट लाइक अ वन शॉट अप्रोच कि 1 + B = C. It's not like that. It's more on the judgmental thing. So you have to see all the approaches together कि आपको कौन सी अप्रोच लगानी है जब भी आप फेयर वैल्यूएशन करो. Which is very important कि आपको क्या करना है, बट उसके लिए आपको पूरा डिटेल करना पड़ेगा किसी यूनिट ऑफ अकाउंट को कि व्हाट डज दैट सेज, क्या टर्म्स कंडीशन है, क्या उसके अंदर स्पेशलाइजेशन है. तो Valuation can be simple, अगर डायरेक्ट में मिल जाए. That can be complex if there is nothing inputs we have. And based on that we have hierarchy which we have already discussed कि हमारे observable input पहले लगेंगे, उसके बाद unobservable input लगेंगे. वो यहाँ बोलता है और ये disclosures में भी आता है कि you should apply the level 1 which is more observable input कि बाहर से आपको जो इन्फॉर्मेशन मिलती है वो आप कैप्चर करो. कंपनी की इन्फॉर्मेशन बाद जब नहीं मिलती तब हम जाएंगे, लेकिन आज आप बाहर के इनपुट्स को रेफर करो and you should write all the assumptions, key assumptions in your valuation report while you doing that valuation. Level 1, level 2. Level 1 मतलब कि आपने सीधा नजदीक से प्राइस कर दिया. फॉर एग्जांपल मेरे पास कोई FMCG के शेयर्स हैं लेकिन वो मार्केट में ट्रेड नहीं होते, लेकिन उसके पीई और जो फैक्टर्स हैं उसके रेशियो जो है वो सिमिलर आईटीसी से है. आईटीसी को मैं एक बेस लेता हूं और मैं बोल सकता हूँ आईटीसी इतनी बड़ी कंपनी है, यहाँ पर वो सिनर्जी नहीं होगी, यहाँ पर हम उसको उन फैक्टर करते रहे, डिस्काउंटिंग करते रहे, हम एक वैल्यू पे आ जाते हैं. वो लेवल 2 है क्योंकि हम एक पर्टिकुलर मार्केट की चीज को उठा के उसको अपने अकॉर्डिंग ढाल के तक पहुंचे. दैट इज लेवल 2. लेवल 3 इज समथिंग कि मतलब मार्केट में कुछ है ही नहीं, हमें बाहर से कुछ भी नहीं मिल रहा, हमारी जो कॉस्ट बड़ी लग रही है उसको कैलकुलेट करने में. देन कंपनी सेज कि हमारे जो खुद के असम्पशंस, खुद की जो भी कैलकुलेशंस है आप अपना कैलकुलेट करो और उसको फिर प्रेजेंट करो. दैट इज लेवल 3. तो दिस इज दी मेजरली फ्रेमवर्क जहां पर किस तरीके से हम वैल्यूएशन करते हैं कि क्या एसेट की कैटेगरी है, उसको हमें किस तरीके से किस मार्केट में देखना है, क्या हमें लगानी है, क्या टर्म्स कंडीशन, क्या उसके हमें एट्रीब्यूट्स देखने हैं और कैसे हमें हायरार्की बनानी है अपने इनपुट्स को जो उसका एक रॉ मटेरियल है जिससे हम अपनी वैल्यूएशन रिपोर्ट बनाएंगे. तो यही हमारे वैल्यूएशन के प्रिंसिपल्स हैं जो हमारे IFRS इंड एएस में बोले गए हैं. एंड नीडलेस टू से इंड एएस, IFRS, US GAAP, they all are in. There is no major carve out in these three standards. तो जहां भी आप करो, आप अगर US GAAP लगा रहे हो भी आप यही करोगे, आप इंड एएस कर रहे हो तब भी यही करोगे, आप IFRS कर रहे हो तब भी यही करोगे. Principles are same for all these three standards. There is no carve. Now here comes disclosure. थोड़ा सा क्विक करेंगे. I think we have little time, so I will be quick. I would like to focus more on the practical scenarios. तो डिस्क्लोजर में हम मेजरली यही करते हैं, जो हमारे इनपुट्स हैं उनको हम दिखाते हैं. रिकरिंग होते हैं कि जो हम बार बार हर रिपोर्टिंग डेट पे करते हैं. फॉर एग्जांपल हमें जो शेयर सिक्योरिटीज हैं हर साल हर रिपोर्टिंग डेट पे करना पड़ता है. नॉन रिकरिंग ट्रांजैक्शन इज समथिंग लाइक IFRS 5 जो हमारा होता है नॉन करंट एसेट हेल्ड फॉर सेल. उसमें वो बोलता है कि आप उसको फेयर वैल्यू पे करोगे, लेकिन दैट इज नॉन रिकरिंग. आप किसी एसेट को बोलते हैं कि मेरे लिए किताब है, मुझे इसको बेचना है, तो आप नॉन करंट से करंट में ट्रांसफर करते हो और फिर आपको कॉस्ट पे ना करके आप उसको फेयर वैल्यू पे लाते हो. दैट इज अ नॉन रिकरिंग ट्रांजैक्शन. तो उसके आपको बताना पड़ता है कि कौन सी रिकरिंग ट्रांजैक्शन है, कौन सी नॉन रिकरिंग ट्रांजैक्शन है इन दी डिस्क्लोजर रिक्वायरमेंट. लेवल्स जो हमने बात करी, लेवल 1, 2, 3 वो भी डिस्क्लोजर में आते हैं. और लेवल 3 जो है वो बड़ा रिस्की है क्योंकि कंपनी अपने अकॉर्डिंग चीजें डाल सकती है, अपने अकॉर्डिंग चीजें बना सकती है, बना सकती है. तो ये भी जरूरी है जब आप लेवल 3 की अकॉर्डिंग वैल्यूएशन कर रहे हो, देन व्हाट विल बी द इंपैक्ट ऑन द इनकम स्टेटमेंट, वो भी आपको डिस्क्लोजर रिपोर्ट में देना.
राइट.
ये बस मैं आपको क्विकली दिखाना चाह रहा हूँ कि डाबर की फाइनेंशियल स्टेटमेंट है, जिसमें आप देख सकते हो दिस इज लाइक एक्सट्रैक्ट फ्रॉम द एनुअल रिपोर्ट, जहाँ अपने 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 जो एसेट्स हैं लाइक म्यूचुअल फंड की इन्वेस्टमेंट लेवल 1, क्योंकि सीधा डायरेक्ट मार्केट से उठा है, हमारे पास एक एक्टिव मार्केट है, म्यूचुअल फंड के हमारे पास भाव कॉपी से रेट आते हैं। डेब्ट सिक्योरिटीज हम लेवल 2 लगा रहे हैं, क्योंकि हमारे जो डिबेंचर्स है वो कहीं ट्रेड नहीं कर रहे, बट कुछ एट्रीब्यूट लगा के हम उसको कैलकुलेट लेवल 2 पे कर पा रहे हैं। और कुछ ऐसे एसेट्स हैं जो इक्विटी में जो कि अनलिस्टेड है, जो कोई मतलब हमने ऐसी किसी अपने पार्टनरशिप में किसी भी मतलब किसी रिलेशन में हमने पैसा लगा दिया किसी बिजनेस में, तो वो लेवल 3 में, क्योंकि उसकी हमारे पास कोई भी इंफॉर्मेशन नहीं है, हम अपनी खुद की वैल्यूएशन अपने खुद कैश फ्लो करके हम अपना लेवल 3 पे उसको दिखा रहे हैं। So that's you can see it's a live like it's a disclosure which happens in every annual report. You can see कि हर एनुअल रिपोर्ट में ये आपको मिलेगा, एंड इट्स नॉट अ थिंग कि आप बोलोगे कि मुझे समझ में आ गया, इट्स अ प्रैक्टिस बेस्ड थिंग, क्योंकि वैल्यूएशन इज समथिंग कि आप हर किसी कंडीशन में देखोगे कि क्या आपको चीज कैसे आपको करनी है, दैट्स द आर्ट, so that's why it comes a judgment and also your professionalism. तो can you please tell me कितना टाइम मेरे पास बचा है, so that मैं उसके अकॉर्डिंग अपने एग्जांपल कवर कर पाऊं?
12:25 हो गए जी। आपको 1 घंटे का स्लॉट दिया था।
कितना टाइम है सर मेरे पास?
प्रियंका, आपको 1 घंटे का
नहीं, अगर क्वेश्चन
अंकित जी,
लेने तो फिर मैं आई कैन स्किप दैट। क्या
अंकित जी, अभी आप आपको आई थिंक 1 घंटे का स्लॉट दिया था ना?
हाँ हाँ,
तो अभी आपके पास है, अभी तो 5 मिनट्स यू हैव मोर, एंड क्वेरीज कोई अभी इतनी खास ज्यादा कोई क्वेरीज आई नहीं है, तो यू कैन कंटिन्यू। आप 10 मिनट्स और ले लीजिए, फिर हम अनिल सर के साथ कंटिन्यू कर लेंगे।
अच्छा, अगर हम एक अगला
हाँ जी।
कभी सेशन आपका प्रैक्टिकल का ले लें, दैट विल बी कन्वीनियंट फॉर यू।
हाँ
हाँ,
हाँ,
एक
ठीक है,
बार
मैं प्रैक्टिकल, हाँ
नहीं, आप
ठीक है,
थोड़ा सा
प्रैक्टिकल का एक
कंटिन्यू कर
एग्जांपल
लें।
ले लेता हूं मैं।
अभी आप 10 मिनट का कर लें कंटिन्यू, देन वी कैन हैव अ सेपरेट सेशन फॉर द प्रैक्टिकल प्रॉब्लम्स, क्योंकि ये लेवल 1 to 3 वाकई पीपल नीड टू बी एक्सप्लेन्ड मोर।
So, sir, would you like to take that practical session? आप
नहीं,
लेना
आगे
चाहेंगे?
कभी सोच लेंगे। अरे प्रियंका, आगे
अच्छा,
मैं कह
आगे
रहा हूँ
आगे
आगे
नेक्स्ट
आगे
वेबिनार्स में।
कभी
हाँ
सोच
हाँ,
लेंगे।
दैट वर्क,
अभी
दैट
इनको
वर्क।
कंटिन्यू करने दो, लेट
बिल्कुल बिल्कुल।
मोमेंटम शुड नॉट बी ब्रोकन।
बिल्कुल आगे चल, आप कंटिन्यू कीजिए, फिर आप यू कैन टेक 10 मिनट्स मोर।
ओके, तो मैं 10 मिनट्स के अकॉर्डिंग अपने प्रैक्टिकल एग्जांपल्स को कवर कर लेता हूँ अभी तो।
बिल्कुल
ठीक है, तो आई विल ट्राई कि मैं 10 मिनट्स में अपना एक ग्लिम्स दे पाऊँ कि रियल लाइफ में कैसे सिचुएशन चल रही हैं, हाउ वी आर डीलिंग विद दैट। तो आप ये देख सकते हो, यहाँ पर कुछ एग्जांपल्स बने हुए हैं, IS 40 एग्रीकल्चर, बिजनेस कॉम्बिनेशन, इन सब सिनेरियोज में हम वैल्यूएशन करते हैं। बायोलॉजिकल एसेट्स, बिजनेस, फेयर वैल्यू थ्रू P&L, OCI, एम्प्लॉय बेनिफिट, नॉन फाइनेंशियल में हमारे पास प्रॉपर्टी है, प्लांट्स हैं, इंटेंजिबल एसेट, इन्वेस्टमेंट प्रॉपर्टी, बिजनेस कॉम्बिनेशंस, किसी शेयर को बिजनेस को एक्वायर कर रहे हैं, तो मेजरली क्या होता है कि घूमकर जो प्रैक्टिकली यही सिनेरियोज आते हैं, इन्हीं IFRS की एप्लीकेबिलिटी आती है। आपने कोई, जैसे अभी IFRS के बारे में बात करें कि कोई मशीनरी है या कोई भी एक ऐसी यूनिट है जो हमारे काम की नहीं है, हम उसको आगे सेपरेट करते हैं कि हम अपने बिजनेस में यूज नहीं करेंगे उसको, हम उसको सेपरेट। अब तक हमारी अकाउंटिंग पॉलिसी यही है कि हम कॉस्ट बेस्ड चल रहे हैं, बट हम जब जैसे ही बोलते हैं कि नहीं हम उसको अलग कर देते हैं, पहले तो वो करंट एसेट में आ जाएगा, तो उसको फिर फेयर वैल्यू पे आप उसको जब इतने में बेच पाओगे, नेट रियलाइजेबल वैल्यू लेस कॉस्ट ऑफ ट्रांजेक्शन, उस वैल्यू पे आप रिपोर्ट करोगे अपने फाइनेंशियल स्टेटमेंट में। तो वो फेयर वैल्यू कैसे निकलती है वो भी हम एक बार कवर करते हैं, क्योंकि वो नॉन करंट एसेट में हम कैसे उसको वैल्यू कर पाएंगे। इम्पेयरमेंट, लाइक इम्पेयरमेंट दो चीजें हैं, जो वैल्यू जो हमें बोलता है रिकवरेबल अमाउंट, वो इम्पेयरमेंट ये बोलता है ना हमें कि आप जब भी इम्पेयरमेंट करते हो तो आप देखते हो आपकी कैरिंग वैल्यू क्या है और आपका रिकवरेबल अमाउंट क्या है, विच एवर इज लोअर। लेकिन रिकवरेबल अमाउंट में देयर आर टू थिंग्स। पहली चीज होती है कि आपका वैल्यू इन यूज क्या है और आपकी नेट रियलाइजेबल वैल्यू क्या है, विच एवर इज हायर इज योर रिकवरेबल अमाउंट। तो यहाँ पर क्या है कि जो वैल्यू इन यूज है वो कवर नहीं है इंड AS 113 में, लेकिन जो नेट रियलाइजेबल वैल्यू है वो कवर है इंड AS 113। तो वैल्यू इन यूज आप कंपनी के अकॉर्डिंग जैसे करना चाहते हो, कोई assumption कुछ करना चाहते हो, आप इंड AS 113 नहीं लगाओगे उसके लिए। लेकिन जब आप कहते हो नेट रियलाइजेबल वैल्यू, अगर मैं उस एसेट को बेचता हूँ तो वो कैसे निकलेगा वो हमें ये बताता है इंड एस 113। तो ये भी हमें बड़ा ध्यान रखने वाली बात है जब भी हम इम्पेयरमेंट टेस्टिंग कर रहे हैं, तो सॉरी इम्पेयरमेंट कर रहे हैं। तो यही प्रैक्टिकल सिनेरियोज हैं। अभी मैं एक प्रैक्टिकल एग्जांपल ले पाया हूँ यहाँ पर, जो कि मैं आपको बता पाऊंगा कि एक मशीनरी है। कैन यू सी माय एक्सेल स्क्रीन?
यस यस।
तो ये जो एक हमारा, मैंने इसमें एग्जांपल लिया है नॉन फाइनेंशियल एसेट का। आप इसमें देख सकते हो कि एक मशीनरी है जो परचेज की है 1 लाख रुपीस की। हमारी पॉलिसी यही है कि हम उसको अकाउंटिंग पॉलिसी, हम उसको रिवैल्यूएशन मेथड पे रिपोर्ट करेंगे। तो अब कैसे करें वो मशीनरी की वैल्यू? अब जो हमने अब तक प्रेजेंटेशन में करा है वो यहाँ पर आप प्रैक्टिकल सिनेरियो देख सकते हो। मैं ये नहीं बोलूंगा 1 लाख की जो वैल्यू है 150 हो गई है, क्योंकि दिस इज जजमेंटल थिंग। आई कैन नॉट से कि ये मैथमेटिकल है, कि मैथमेटिक्स में मैंने बोला कि ये 4 फैक्टर लगाओ और मेरे पास 1.5 लाख आ गया, ऐसा नहीं है। मार्केट फैक्टर क्या हो सकते हैं कि ऑब्जर्वेबल इनपुट्स में लगाऊं, बाहर की इंफॉर्मेशन, मार्केट से रिलेटेड, जो कि एंटिटी के बायस से बाहर है। मैं एंटिटी का कोई इसमें सही नहीं है, बाहर से इंफॉर्मेशन लाके मैं यूज कर रहा हूँ मशीनरी के लिए, कि मशीनरी के जो पार्ट्स हैं वो बाहर कितने के बिक रहे हैं, या मशीनरी जो है उसकी टेक्नोलॉजिकल ऑक्सीलेंस हो गया है तो वो मशीनरी की वैल्यू 1 लाख ना रह के 20,000 रह गई है। वो सब चीजें मुझे मार्केट फैक्टर देखने पड़ेंगे, लेवल 1 हो या लेवल 2। लेवल 1 में मुझे डायरेक्ट मशीनरी मिल गई। फॉर एग्जाम्पल मेरे पास लैपटॉप है, लैपटॉप 1 लाख रुपए का है। अब मुझे पता है मार्केट में वही लैपटॉप 90,000 का बिक रहा है, तो मैं उसकी फेयर वैल्यू 90,000 करूंगा। दैट इज लेवल 1। लेवल 2 में मैंने लैपटॉप अपने अकॉर्डिंग बनवाया हुआ है, इसमें विंडो मैंने अपनी बनाई हुई है, मेरे सारे सॉफ्टवेयर अपने बने हुए हैं। तो मैं लेवल 2 देखूंगा कि अगर उस काइंड ऑफ थिंग को मैं अगर वैसे करूं, कुछ चीजें मैंने अपनी भी लगाई हैं, उन सब कंसिडर करूं, तो लेवल 2 में मेरे लैपटॉप की वैल्यू क्या होगी। लेवल 3 ये है कि मैंने ही लैपटॉप बनाया है, वो ऐसा स्पेशलाइज है जो कि आज तक किसी ने किया ही नहीं है, मेरे बिजनेस में यूज हो रहा है, मेरे प्रोडक्शन में यूज हो रहा है लैपटॉप। तो मेरे पास कहीं बाहर की इन्फॉर्मेशन ही नहीं है, कोई मेरे पास विजिबिलिटी नहीं है। देन मैं अपना लेवल 3 लगाऊंगा और मैं अपनी जो क्या कहते हैं इनकम बेस्ड अप्रोच है वो लगाऊंगा। बट मैं ये नहीं बोल सकता मुझे इनकम बेस्ड ही लगानी है, या मुझे मार्केट बेस्ड लगानी है, या मुझे कॉस्ट बेस्ड लगानी है। इट डिपेंड्स ऑन दैट पर्टिकुलर सर्कमस्टांसेस। उस सर्कमस्टांसेस में क्या आपके एट्रीब्यूट्स हैं, क्या कंडीशन है। हो सकता है कुछ रिस्ट्रिक्शन हो गवर्नमेंट की रेगुलेशन से। फॉर एग्जाम्पल आपने कोई मशीनरी लगाई, गवर्नमेंट ने उस पर आपको ग्रांट्स दी, और ग्रांट से आप उस 10 साल तक उस मशीनरी को चलाओगे, भले आपको कुछ भी करना पड़े, आपको उसको रन करना ही पड़ेगा, सोशल एक्टिविटी है। तो वो जो रिस्ट्रिक्शन है वो भी आपको कंसिडर करनी पड़ेगी अपनी वैल्यूएशन में। अब उसके लिए आप क्या लगाओगे, कौन सा फैक्टर लगाओगे, यू विल हैव टू सी दैट। वही, अब हम मशीनरी कर रहे हैं तो हमें हाईएस्ट एंड बेस्ट यूज देखना है कि इस मशीनरी का क्या बेस्ट यूज है। हो सकता है मशीनरी हमारे आईफोन को बना रही है, हो सकता है अगर हम इससे कुछ और विंडो फोन बनाए तो वो हमें अच्छी वैल्यू दे, तो वो फैक्टर भी हमें देखना पड़ेगा। बट यहाँ अभी हम ये प्रिज्यूम कर रहे हैं कि ये बेस्ट सिनेरियो है जिसमें हम अपना मशीनरी को यूटिलाइज कर रहे हैं। राइट नाउ हमारी जो यहाँ अप्रोचेज हैं, देयर आर 3 अप्रोचेज, तो हम जिसके अकॉर्डिंग हम एक्शन ले सकते हैं बेस्ड ऑन दी अगेन टर्म्स एंड कंडीशन। मार्केट बेस्ड में हम कह रहे हैं एक्टिव मार्केट है तो लगा दो, वो वैल्यू ले लो, अगर नहीं है तो ये मेथड एप्लीकेबल ही नहीं है, हम लगा ही नहीं सकते मार्केट बेस्ड। कॉस्ट बेस्ड में मार्केट में वो मशीनरी मिल रही है, लेकिन हमारे जो मॉडिफिकेशंस हैं, हमारे जो अलग अलग एट्रीब्यूट्स हैं, कंडीशंस हैं, उन सबको कंसीडर करके आप कॉस्ट बेस्ड मेथड लगा सकते हो। वो आप कर सकते हो। जैसे इस केस में अगर कोई मशीनरी 2 ईयर्स ओल्ड है और मेजर मॉडिफिकेशन हुई है, तो नई मशीनरी 2 साल के बाद और आफ्टर एडजस्टिंग दीज एट्रीब्यूट क्या वैल्यू देंगी, हम उसके बेस पे कॉस्ट बेस कर सकते हैं। इनकम बेस्ड अप्रोच में वही हम कि फ्यूचर वैल्यू को देखेंगे और फ्यूचर वैल्यू के अकॉर्डिंग हम कहेंगे कि साल्वेज वैल्यू ये मिलेगी, हम इतनी मशीनरी से आईफोन बना पाएंगे और ये हमारे प्रेजेंट वैल्यू में ये इसकी वैल्यू होगी। तो मतलब ये है कि अगर हम मतलब कि जो इनकम बेस्ड अप्रोच है that is least recommended in the practical scenarios. The most recommended approach is first, then second, then third. लेकिन कभी हम इस अप्रोच से श्योर नहीं हो रहे, हमने ये अप्रोच भी लगा दी, तो जो पर्टिकुलर सिनेरियो में हमें ठीक लग रहा है तो हम हो सकता है इस अप्रोच को हम स्क्रैप आउट कर दें, बिकॉज इसमें काफी अजम्पशंस हमें यूज करनी पड़ रही हैं और ये अप्रोच हमें वैल्यूएशन दे रही है। तो वो हमें है एरियाज जो हैं वो कुछ टाइम पे डिसीजन लेना पड़ेगा, एंड दैट शुड बी डॉक्यूमेंटेड इन आवर वैल्यूएशन रिपोर्ट, बिकॉज दैट इज योर प्रोफेशनल स्टेटमेंट्स जो लिखी हैं, अगर वो चेंज हो जाए, उसमें से कोई भी assumption चेंज हो जाए, योर वैल्यूएशन विल बी एब्सोल्युटली डिफरेंट. तो बेस्ड ऑन दीज फैक्टर्स भी हमने यहाँ करा है कि जैसे क्या अप्रोच लगाएं, ये ऑफ कोर्स जजमेंट पे ही डिपेंड करता है और उसके अकॉर्डिंग ही हम आगे कर सकते हैं. ऑफ कोर्स मैं आपको कुछ प्रैक्टिकल रिपोर्ट्स दिखा सकता हूँ जो वैल्यूअर्स ने इशू की हैं फॉर पर्टिकुलर सिनेरियोज, मे बी गोल्ड, सिक्योरिटीज, शेयर्स, प्रॉपर्टीज. उसके बेस पे यू कैन सी कि वो जो assumptions डिफाइंड है, जो उसमें कंडीशन है, जो उसके एट्रीब्यूट्स है, किस तरीके से उसको एनालाइज एक्सप्लेन करके क्या वैल्यू को रिकमेंड किया गया है, एंड देन वी रिकॉर्ड दैट इन द फाइनेंशियल. I think I'm done. So any questions, any discussion? So I am open for that. Thank you so much.
Uh, Thank you, Ankit ji, for your nice deliberation. We have some queries.
Yeah.
आशीष खंडेलवाल जी का एक क्वेरी है. इन टेबल 1 quoted price of our own company.
Okay, quoted price for our own company.
Yes.
Okay. फर्स्ट ऑफ ऑल जो हम अपने सिक्योरिटीज को वैल्यू करते हैं, ओन सिक्योरिटीज, मतलब मैं आपका क्वेश्चन नहीं समझा. लाइक यू वांट टू रिवैल्यू योर इक्विटी इंस्ट्रूमेंट, बिकॉज है क्या, आपके शेयर कैपिटल है, यू कैन नॉट फेयर वैल्यू दैट इज नॉट अ फाइनेंशियल और नॉन फाइनेंशियल एसेट एंड लायबिलिटी.
शायद ये अपना ट्रेजरी शेयर के बारे में पूछ रहे होंगे, या वो जो बाईबैक होता है उसकी तो नहीं बात कर रहे हैं. लेवल 1 ऑफ योर ओन कंपनी, ये क्वेश्चन ही गलत है शायद.
मतलब
not a complete.
दूसरा क्वेश्चन लीजिए गौरव जी.
I think the question would be like
You
the
please
how to
suggest
value
how
the
should
treasury
we
shares.
value NCDs listed on recognized stock exchange, but after listing CRH have assigned D rating to the instruments. Then how should we value those NCDs?
Can you please suggest how should we value NCD?
assign D rating to the instrument. Of course, means these are the factors at that particular time. What is the rating for that particular non-convertible debentures, and what are the rate at that time, and what are the attribute, what is the performance risk, and what is the credit risk, what is the how the risk management is doing, what is the quality of that management. All such factors, whether financial or non-financial, all will be seen, and based on that attribute, the approach will be taken, whether it should be on the income based or a cost based or a market based. So it's not like a strict answer, because that depends on the major attributes at that time, like rating agencies, company management, and how the general public is valuing that based on the demand and supply. All attributes will be seen at that.
Okay. And now next question is Pankaj Priyadarshi. P&L statement net profit should include the dividend? Question mark.
Income statement net profit should include the dividend.
Yeah, income statement net profit should include the dividend.
Of course, like if we are getting some dividend, then it will be included in the net profit. But if we are paying something, that will not be included in the net profit. That will be a part of statement of changes in equity, SOCI, because that is a distribution of profit. That will not come neither in P&L nor in OCI. So that will be a part of my statement of changes in equity.
Okay, so that's it, Ankit ji. These are the all queries what we have received for the today's topic, and we thank to you for such a nice deliberation. Now we
Thank you.
request Anil ji for his today's deliberation on Ind AS 16 property, plant and equipment. Anil ji, over to you.
Yes, hi. Thank you very much, and very warm welcome to all the participants, and wishing you a very, very happy New Year to all. And for today's session, we are going to discuss a very basic topic relating to the assets accounting, which is property, plant, and equipment. So let me share the screen as well. So whether my screen is visible?
GG.
Yeah. Okay. So the today's topic is Ind AS 16, which is the property, plant, and equipment. And in the internationally part, it is the IES 16. So there's no measuring difference between Ind AS and the IFRS. But in terms of this IGAP accounting, there are some differences between these two. Means Ind AS 16 and Indian accounting, which is governed by Accounting Standard 10. So now let's discuss this very basic topic relating to this property, plant, and accounting. So agenda for this today's session is we will discuss about this overview of this topic relating to this property, plant, and equipment. How would we how to do the accounting of this property, plant, and equipment? Then we will discuss about the definitions. We will not discuss the all definitions, but we will discuss the very relevant definition, which will be key factor for deciding whether the same will be part of property, plant, and accounting or not. Then we will discuss about this initial recognition, how to do the recognize or how to recognize all the items which are part of this property, plant, and equipment. So after this initial recognition, if there's any subsequent cost, and how to do this accounting of the subsequent cost, whether that will be part of P&L or that will be part of the property, plant, and equipment. Means the that will be capitalized or that will be part of the P&L. How to do the subsequent measurement. So after this initial recognition in year 2 and year 3, how to do this measurement for this property, plant, and equipment. Then we will discuss about this depreciation, how to depreciate the assets, whether as per the Ind AS or as per the companies. Then in last, we will discuss the disclosures and the differences between this Ind AS and the accounting standards. So we will discuss some case studies as well in the between slides. And if there's any questions, we will take in the last, and I will happy to take this session in more interactive way. So now let's discuss the overview and the scope of this topic, which is the property, plant, and equipment. In short term, I will normally pronounce this PPE. So the objective of this standard is to prescribe the accounting treatment for property, plant, and equipment. How to account all the transactions and what would be the accounting for all the transactions relating to the PPE. And what is the scope? So whenever there is a standard, whether it's an Ind AS or IFRS or this the IGAP accounting, there is some inclusion and the exclusion part. So every standard will have their own inclusion and exclusion. So like in that case as well. So this standard has also already defined what items or what type of the nature of accounting will not be included into the Ind AS 16 part. Like this standard will not apply to the all items which has been classified to the held for sale, because there's a separate standard for this held for sale which is governed by this Ind AS 105. So biological assets relating to the agricultural activity. So all biological assets is governed by Ind AS 41, and the corresponding standard in the international scenario is IES 41. mineral rights and reserves and exploration and the evaluation assets. So there's a separate standards relating to the mineral rights. So all assets which is been pertaining to the mineral rights and the reserves is being governed by Ind AS 106, sorry. So that is the scope basically. So it has excluded three items which is governed by very specific standards. And the core principle of this standard is to how to recognize, how to measure and recognize whether it is at cost or at the revaluation part. So we will discuss in the later slides. So we will discuss about some key definitions. So key definitions means we will firstly discuss about the property, plant and equipment, the definition of the property, plant and equipment, because after meeting the requirements of this definition of property, plant and equipment, only then we can do the accounting of this PPE. Then we will discuss about this depreciable amount, depreciation, its residual value and the useful life. So see these four definitions, because these are the very key definitions relating to this PPE part. So we will discuss in our later slides. So now let's discuss about the very basic part, which is the definition of this property, plant and equipment, right? So the definition which has been defined by this Ind AS 16 is the property, plant and equipment are tangible items. So tangible item means the items which can be physically touched or physically seen. So might be that there are some intangible items, right? So intangible items are being governed by separate standard, which is the Ind AS 38. So but the today's topic is we will discuss about only the tangible parts, which is the PPE. So property, plant and equipment are tangible items that are held for use in the production or supply of goods or services, or for rental to others, or for administrative purposes. So there are the three or four things that we need to keep in our mind before applying this the property, plant and equipment accounting. So the assets should be held for use in the production or for supply of goods or services. Production means, suppose I am running a manufacturing sector and I have installed a machinery in my factory. So that machinery will be used for the production of my goods, right? So that will be my PPE. Or for supply of good or services, right? So might be that I am having a trucks or some transportation material which will be used for the transportation of goods from one thing to the another for my manufacturing facility. So that will be part of my PPE. Or for rental to other. Rental to other means that I'm owning a building and I am given I have given that building on rent to the others, so I'm earning some income. But there is a difference between this earning and income, which is being governed under this Ind AS 16, and there is a separate standard is called investment properties. The investment properties also which is governed by Ind AS 40, which states that the asset should be for the capital appreciation purpose and earning the rental purpose, right? So in this case, we are earning a rent, or for administrative purposes. Administrative purposes means that suppose I am having a computers for my factory, for my office, for the office staff purpose. So that purpose would be for the administration purpose. So that can be part of my the property, plant and equipment, and are expected to be used during more than one period. More than one period means it can be used for 2 years, 3 years, 4 years, 5 years. So that means more than 1 year should be there. So the definition is so much important to classify all the items, whether it will be part of my property, plant and equipment, or it can be part of some other item. So might be that in my case, I am running a factory, and I have installed a machinery. So that machinery can be my property, plant and equipment. But that machinery can be an inventory for the other users, because that can be held for trading by the other users. So whenever there is a held for trading, or whenever I'm having an assets for the purpose of trading on day-to-day purpose, that can be inventory for the other side. So it can depend upon the industry to industry, organization to organization, whether a particular assets would be part of PPE or can be part of inventory or some other items, right? So that's why this definition is very important. So now we have discussed about this property, plant and equipment, the tangible items. So now the very basic question is, because this property, plant and equipment is our assets, Now the question arises, what does the asset mean? Because this, in simple terms, if I can say that property, plant and equipment is my fixed assets. So now the question is, what is the assets? Because we need to understand the definition of the assets as well. So an assets is a resource controlled by the entity as a result of past event from which future economic benefits are expected to flow to the entity. So that means one thing is that the control factor should be there and the future economic benefits should be there from using that assets. So these are the very, very basic definition which has been defined in the standard itself. So now, after meeting the definition or after qualifying the definition, so now the question is, how would we recognize a property, plant and equipment in our books? So the standard says that the cost of an item of property, plant and equipment shall be recognized as an asset if and only if it is probable that the future economic benefits associated with the item will flow to the entity and the cost of the item can be measured reliably. So that means both the things, both the criteria should get fulfilled before the recognition of this property, plant and equipment in our books of accounts. This standard doesn't prescribe the unit of measure of the recognition. Unit of measure means what constitute an item of property, plant and equipment. Thus, judgment is required in applying the recognition criteria to an entity specific circumstances. So that means the standard doesn't define what constitutes an item of property, plant and equipment. This depends upon industry. Whether the building should be capitalized, this depends upon the judgment of the particular organization. Whether the particular item will be part of the plant and machinery or not to be part of the plant and machinery, that need to be decided by the entity itself. The thing is that the initial recognition should be at cost only. Whenever the item of property, plant and equipment need to be recognized in our books of account, that need to be recognized at the cost only, right? So in the initial recognition, both this criteria means the future economic benefits, certainty of the future economic benefits and the measurement of the cost should be on the reliable basis. Now the question is, what is meaning of the cost, right? So initial recognition should be at cost only. So now the question is, what is the meaning of the cost? So the standard says that cost is the amount of cash or cash equivalents paid. So that means, on simple terms, I can say that whatever the amount I will pay for a particular thing, that will be my cost. On simple terms, right? Or the fair value or the other consideration given to acquire an assets at the time of acquisition or construction, or where applicable, the amount attributed to that assets when initially recognized in accordance with the specific standards, requirement of the other standards. So means we can categorize into the three parts. Whatever the amount that you have paid in the form of cash or cash equivalent, that can be part of your cost, or the fair value of the other consideration given to acquire the assets. And in third case, suppose you have acquired the assets by giving a shares, your own shares, in which there is a separate standard which is called the Ind AS 102. The separate standard has defined the criteria for the recognition of that part. So right, so we can say that at the initial recognition, cost, the assets should be get recognized at the cost only. And what is the meaning of the cost? Whatever the amount you will pay, or whatever the fair value of the other consideration you will pay for that assets. If suppose there is any deferred credit norms, deferred credit means that you will pay after 3 years, 4 years or 5 years, right? So whatever the difference between the cash equivalent price and the total payment will get recognized under the separate standard, which is called the borrowing cost standard, which is the Ind AS 23. We specifically prescribe that cost. This is the part of the unwinding of discount or the finance cost, right? So that can be part of the finance cost, but that will not get capitalized under this standard unless and until it will be part of the qualifying assets that can be capitalized only, right? So there's a separate standard for this the borrowing cost part, which is governed by this IAS or sorry, Ind AS 23. Now the basic question is, what is the element of the cost, right? What items we need to consider for the capitalization purpose. The standard has prescribed the criteria, means what items we need to include and what items we need to exclude. The standard says that for capitalizing or for do the property, plant and equipment accounting, the item of the cost should include. So that means the inclusive definition has been given under the standard itself, which says that all purchase price, whatever the purchase price you will pay, less of discounts, trade discounts and rebates, and all duties or all taxes which are non-refundable, right? So that can be added to the cost of the property, plant and equipment. Means suppose you are buying a particular assets of 1000 and the trader has given a trade discount of 100. So that means 900 you have to take into your account. And suppose you have paid 200 as an GST or the other taxes which is non-refundable. So you will capitalize 900 plus 200 is equal to 1100 in your books of accounts. This is a very, very basic thing, right? So basic thing. The third thing is initial estimate of dismantle and removal item, including site restoration, which is a very new thing under this Ind AS 16 part. Although the same thing is given under the AS 10 as well, but Ind AS 16 says that all initial and dismantling costs should be taken at the present value. But this cost will be applicable for certain type of industries like the oil sector, oil and rig sectors, wherein there is a legal obligation whenever there is any dismantle of the assets or whenever you will remove the items of the assets, you will restore that assets into the original part. So you will incur some expenses. Standard says that you need to make the provision at the present value and capitalize those costs as well, right? So this item is a very, very new thing we will discuss about in the practical part as well. The fourth thing is that directly attributable cost. So directly attributable cost means to bring the asset to the location and condition necessary to operate, right? So the standard has defined what is the meaning of the directly attributable cost. So we will discuss what items will be part of the direct attributable cost and what item will not be part of the directly attributable cost. Borrowing cost. Borrowing cost means which is governed by this Ind AS 23, the separate standards. As and when this borrowing cost or the assets will be qualified assets, you can capitalize the borrowing cost into your assets as well. But that will be governed by this separate standard. But this cost will be part of your element of cost part. This will be part of your cost when doing the capitalization of your PP in your books of account. The four things means purchase price less rebate and discounts, plus any non-refundable taxes, plus any dismantling cost, plus any directly attributable cost or borrowings if any. Now the question is, what is meaning of this directly attributable cost? So what is meaning of this directly attributable cost? Directly attributable cost, the standard defines that all items, all directly costs which can be part of your capitalization of your property, plant and equipment. It can be the cost of employee benefits. Suppose you are constructing a particular assets like a building for your office purpose, and you have deployed some staff for the construction of that building. So that employee cost will be part of your directly attributable cost, and all the benefits will be get capitalized under the assets part. The next thing is that the site preparation cost. Whatever the expenses that you will incur for the site preparation part will be part of the directly attributable cost. So that can be easily capitalized directly. Initial delivery and handling cost means loading and unloading charges up to your factory point, that can be capitalized. Installation and assembly cost. You are going to install a machinery and all installation cost will be part of your directly attributable cost, or we can say that it will be part of your the cost of your property, plant and equipment. Cost of testing or the professional fees. Professional fees means you are taking some advice for the installation or for the how the machinery will work for a particular factory or particular plant. So that cost will be part of the professional fee. So these terms or these costs has been defined by the standard itself, that these are part of the cost of the capitalization. The standard has already also defined some exclusion part. Exclusion means that these costs will not be part of the directly attributable cost. So that means the for example, cost of opening a new facility. So these costs will not be part of your the cost of the property, plant and equipment. It can be expense of in your P&L. In simple terms, we can say that. The next example or next thing is which will not be part of the direct attributable cost is cost of introducing a new product or services. So that means advertising services or advertising activities or advertising expenses. It will not be part of the cost of your property, plant and equipment. Cost of conducting a business in new location or with new class of customers means relocation charges will not be part of your property, plant and equipment. Administrative and general overhead costs. So these are very generic terms. This all general and overhead costs, all administrative costs will not be part of your cost of the property, plant and equipment. Cost incurred when asset is ready for intended use but not yet brought into use. So you have cost incurred but it is not ready for its use. So that will not be part of the cost of the property, plant and equipment. Initial operating losses will not be part of the cost of the property, plant and equipment. Cost of relocating or reorganizing part or all of the entities operations. So I already discussed in the third part as well. So these type of the costs have been excluded. So that means it can be expense of in your P&L part. In simple terms, we can say that, right? So these costs, like the directly attributable costs, inclusion and exclusion, has been defined by the standard that we need to keep in mind while doing this capitalization of our PP in our books of account. Now let's take a very simple case study, keeping in mind the cost as well as the direct attributable cost. Now let's take one case study of this part. XYZ is installing a new machinery at the production facility. It has incurred these costs. Cost of machine, which is net of discount and the plus of the taxes, is 55 lakh dollars, which is a very basic cost, right? It will be capitalized. Initial delivery and handling cost. So it's our directly attributable cost, right? So all directly attributable costs are part of your cost of the PPE. So 4 lakh will get capitalized in our books of account along with the cost of machinery. Cost of site preparation, directly attributable cost, as we discussed in the previous slide, that cost of site preparation will be part of the direct attributable cost and that can be capitalized. Consultant used for the advice on the acquisition of the plant, professional fees for the advice of the installation. So that means that can be capitalized along with the machinery. So that is my direct attributable cost. Interest charges paid to the supplier of the plant for the deferred credit, $5 lakh. So this deferred credit can be part of my finance cost as per Ind AS 23, which is the borrowing cost standard, which specifically prohibit to capitalize this deferred credit part in the books of account. So that means this interest charges, which is in the nature of the deferred credit, will never be capitalized in our books of account. It will be part of the P&L under the finance cost of this $5 lakh. So this $5 lakh will not be part of our books of account as far as the capitalization part is concerned. The next is the present value of estimated dismantling cost to incur after 7 years. So in our the cost elements, so we discussed about that the present value of the dismantling cost that need to be capitalized, right? So that will be capitalized under the books of account, this $4 lakh. So now the question is how to do the accounting of this dismantling cost, because the standard simply says that you need to do the capitalization. Now the question is how to arrive the value and how to do the present value of this dismantling cost. So we will discuss in the later slide, right? So but ultimately this will be part of my the calculation part, this 4 lakh. Operating losses before commercial production. So operating loss before commercial production has been specifically excluded in the standard itself, that operating losses will never be part of the cost of the capitalization. So that means this $4 lakh will never be part of my capitalization of PPE. So that means these two things. One is the interest charges will be part of my P&L, which is the $5 lakh, and the operating loss before commercial production is the $4 lakh. So this $9 lakh will be part of the P&L, and rest of the item will be part of my PPE, means property, plant and equipment accounting. Now let's take the solution. So in the solution as well, the same thing as I've already discussed, except these two things, interest part and the operating losses part, rest of the item will get capitalized under the head of the property, plant and equipment. So all items we need to keep in mind. So there is one education material which has been published by this institute under this name of education material of property, plant and equipment. So various questions and various items have been defined, what items or what type of the natures we need to do under the capitalization part. So we can refer those as well in our practical scenario, right? So now let's take another case study relating to the capitalization of this property, plant and equipment. So we have learned that what is the meaning of the property, plant and equipment, how to recognize this property, plant and equipment in our books of account. Means the directly benefits should be there in our books of account, right? But there are certain assets, like in case of the environment assets or the safety assets, which we need to install in our books, in our factory or in our organization for the operations of our business. So that means without them, the business is not possible. But but there are no direct benefits because these are not used for the production or supply or for rental to others as per the definition which has been defined in the standard itself. But we need to install in our book, in our factory or in our organization. Now the question is, what we need to do in those cases. So that means if suppose we have installed fire extinguisher or safety assets in our factory or in our organization. So now the question is what we need to do for the accounting terms. The standard says that although there is no any direct benefits which we are arriving or which we are deriving from the security assets, but there's the indirect benefits available because without them our production would not be feasible. So that means those assets will be part of my cost of the property, plant and equipment, or we can say that these items will get categorized into the property, plant and equipment. Or in the third scenario, we can say that there are certain enabling assets. Enabling assets means that we are constructing a road for our factory for the easy use of our raw material, but there's no any direct benefits because I can't restrict others for use of that particular road, but I will get the benefits. So that means it will not be my assets. So there are certain opinions which has been issued by the expert advisory committee of the institute, and which was published in the ICS journal as well. What we need to do in terms of the enabling assets means we are not having a control of the enabling assets. Means the roads which we have prepared or the parks which we have prepared for our the employees of our factory or our organization. What we need to do? India simply says that although we are not getting the directly benefits from the enabling assets of the roads or the construction that we have conducted, but we are getting the indirectly benefits. Without them, it is not possible to do the business. The standard simply says that on simple basis, we have to capitalize those assets in our books of account as well, right? So the benefit can be direct or the benefit can be through indirect mode as well. For the self-construction assets, means you are constructing an assets for your own purpose. Whether you are acquiring the assets or you are doing the self-construction or you are doing the construction of your assets, the same principle will get applied. Means whatever the principle, whatever the discussion that we held for the acquiring the assets, the same principle will get applied for the self-construction as well, right? So that means all assets or we can say that the all acquired assets or the self-constructed assets need to be capitalized at the cost only at the initial level. If there's any borrowing cost, there's a separate standard of the Ind AS 23 that we need to keep in our mind. And the what items which need to be excluded, internal profits of the cost of a normal amount of wastage. The same principle will get applied for the self-constructing assets as well. Now come to the point of this spare part, right? So we have classified the assets in part of the PPE. We have measured the assets at cost, recognized the assets at cost. Now suppose there is spare parts available, right? How to do the accounting of the spare part in our books of account while doing the property, plant and equipment accounting as per the Ind AS 16. So currently in current scenario, the spare parts are normally part of your inventory. So that means as and when they consume, they will be part of your consumption. It will not be part of your PPE or the fixed assets. But India says that the spare parts or the standby equipment, we can say that they can qualify for the PPE whenever, or we can say that when it is expected to be used more than one period, right? So, or in simple terms, we can say that if my spare part is meeting my recognition criteria of the PPE, means benefit should be there, and the expected to be used more than one period, same can be part of the PPE as well. So that means the spare part accounting can be part of my PPE, provided it is expected to be used more than one period and the certain other criteria of the PPE can qualify. For example, in case of the furnace, require relining after a specific number of use. So in that case, if suppose spare parts are being used for the furnace part, which can be used more than one period, so that can be capitalized under the head of the furnace as well. Another example we can take from the aircraft industry. So, right, in case of the aircraft interiors or aircraft industry, seats and other things require replacement several times during the life of the aircraft. So that means that replacement can be part of, or that spare part can be part of my property, plant, and equipment. I can capitalize that spare part under the main head, right? So spare part can be part of the property, plant, equipment, whereas in our old in the IGAP standards or erstwhile standards, same is being treated as the consumption, or we can say that it can be part of the inventory. So this is a major change between these two standards. Now, as we discussed in our previous slides, the element of cost include the dismantling cost, right? Or we consider asset retirement obligation. This thing is also been defined in the Ind AS 37 under the provisions accounting, provisions and contingent liabilities and contingent assets topic. The standard says that the India standards in India 16 standard says that we have to take the present value of the dismantling cost, and this thing will be applicable only and only for certain industries, like in case of as I have explained in the example of the oil industry, right? So we need to incur the expenses, but the standard says that you need to take the present value. So the question is, for the present value, I need to calculate, I need to take the discount rate as well. So, right, so we have to capitalize on the present value basis. So for the present value, I need to take the discount rate. Discount rate could be your bank rate or other internal rate as well. So now let's take this example of this how to calculate this ARO. So this example can be I can say that can be discussed in the Ind AS 37 session as well, but I am taking this example while doing the capitalization of PP in my books of account. So suppose on purchase of machine, there is a legal obligation to restore the site for the prevention of environmental damage. Initial estimate of outflow at the end of the year is 5 lakh dollars. So that means I need to require $5 lakh after the end of the 5 year as a dismantling cost, and the discount rate which is taken is 10%. Now the question is how we can calculate the present value. So that means what present value I have to take, which will be equal to 5 lakh after the end of the 5th year, and the discount rate is 10%. So it can be compounded, and my present value you can calculate through the Excel or through the calculator as well, right? So when I am applying this 10% on the 5 lakh, my present value would be $3,10,000, right? So my capitalization value as far as the dismantling cost or the restoration cost as far as this Ind AS 16 is concerned, $3,10,000, right? So I have to capitalize this amount, and what would be the accounting treatment? So simple. Assets of the PP account will get debited and the provision account will get credited by 3,10,000. So this amount 3,10,000, I need to, or I will do the discounting, which we call that in simple terms unwinding of discount, right? So this 3,10,000 over the period of 5 years, by applying this 10% rate, I will charge the interest, right? So that interest will be part of my finance cost in my books of account, and the 3,10,000 by applying this 10% will get converted into 5 lakh. over the period of the 5-year period. So in this way, we can calculate the cost of the dismantling part while doing this capitalization in our books of account. The same thing is given under this Ind AS 37 as well. How to make a provision of this dismantling cost as well. So when we will do this transition, or when we will do this Ind AS on the first time, wherein we need to apply this Ind AS 101, right? There is a certain exemptions which has been provided in the Ind AS 101 itself. I think the same has already been discussed in the first I think the first webinar of while applying this Ind AS 101. The same thing has been mentioned in the Ind AS 101 is that whenever you will do this transition for this property, plant and equipment or the fixed assets, you can take the deemed cost. Deemed cost means either at a fair value or as per your carrying value. But the standard says that in this case, you can take this dismantling cost as well. If you suppose I'm not taken the dismantling cost in your previous gap, so that was not mandatory, but you are doing this accounting under this Ind AS, so you have to take this dismantling cost while doing the transition under this Ind AS. So that's why this topic is very, or this topic of this retirement assets retirement or this dismantling cost is very important while doing the transition from IGAP to the Ind AS, right? I hope this part will be is clear from your side as well. So now, after doing this recognition part of this Ind AS at the first year, might be that you will incur some expenses on day-to-day basis. Means, in the simple terms, we can say that repair and maintenance expense, right? So you are doing this repair and maintenance on day-to-day basis. What we need to do? How to recognize these subsequent expense? Because the first expense we have already capitalized at the initial level. Now the question is subsequent cost. How to do the accounting of the subsequent cost in a books of account? So it could be day-to-day expenditure. So day-to-day expenditure, so I have categorized into two parts, whether the subsequent cost can be part of my expense, means P&L, or it can be capitalized as well, right? So the both scenarios could be possible. So in the first case, day-to-day services expense is part of the expense because it will not add to the further value into my assets part. So like the repair and maintenance will be part of my P&L part. Next is the major inspection cost. Major inspection and there's a one more term called the major replacement part, right? In the last part itself, which says that whether the same can be part of the expense or we can capitalize as well. Standard says that in case of the major inspection, if we can prove that the future economic benefits would be there, I can capitalize those expenses as well. Rather than doing this treating through P&L, I can capitalize. So that means major inspection and the major replacement, I can do the accounting as per this Ind AS 16 rather than doing through the P&L part. Cost of relocation of assets already in use, it will be part of simple on the P&L basis because it will not add value to my assets part. Major modification or enhances the assets output. In simple terms, because the description it clearly mentioned that it will enhance the assets value or assets output. On simple basis, it will get capitalized under the head of the PPE. Expenditure on safety or environment equipment, as I've already mentioned in the previous slides, safety equipments and enabling assets, all expenditure will get capitalized. Major replacements. So we can relate with the major inspection or the modification part. So major inspection means it can be capitalized. So through this way, we can categorize all the expenses between these two, whether we need to expense it off or we need to capitalize it off, right? So now whenever there's an indication that okay, major inspection or major replacement we need to do under the capitalization part, or we need to capitalize that expense into the PPE part, what we need to do the old expenses part. Standard says that old part will get derecognized and the new portion will get recognized in our books of account. In IGAP, right? So in IGAP means the AS10, all expenses relating to the inspection, replacement will be part of the P&L rather than it is part of the capitalization part. So right, the same thing we have discussed, this major inspection part or the replacement part. The same thing I have put into the slide as well. Why this replacement will be part of my capitalization? Because it will add a value, or it will add a future economic benefits to my assets. I will do on simple basis capitalize in my books of account. The same thing will applicable for this inspection or the overall cost, right? So for the inspection, if there is a major inspection means that suppose I've installed a machinery, and for every 3 years I have to inspect, or I have to do incur and expenses on the inspection. So that means 30% expenditure or 40% expenditure I need to incur for the inspection purpose. So that is a major thing, right? So without inspection, my machinery can't run. So that means it's a major thing, and I have to capitalize all the inspection costs. So, and there is a one more term called the componentization accounting. We will discuss later on, but that can be linked with that slide as well. But we will discuss it, why this componentization was required in the Indian scenario. So right, so all subsequent costs, whether it is your day-to-day part, or it can be part of your modification, or it can be part of the relocation, inspection or replacement, whether can be part of P&L or can be part of the capitalization part. Now, after this recognition at initial level, right, and the subsequent cost, whether that can be capitalized or can be a part of the P&L, the next question is, or the next part is, how to measure the assets on subsequent basis, initially at cost, right? Initially should be at cost, and what item of cost we have already discussed, what element of the cost should be there, right? And what item should get excluded while doing this cost part. Now the question is, what would be the subsequent measurement while doing this property, plant and equipment accounting? Standard says that there are two methods, which this is as per your accounting policy choice. Either it could be your cost model, or could be the revaluation model. Cost model says that whatever the carrying value, whatever the cost that you have incurred at the first year or at the initial level, you can continue the same policy for the subsequent period as well. That is a cost model. Another is the revaluation model. Revaluation means the fair value, right? So in the first session, so there was a discussion around how to do the fair value of this property, plant and equipment. It's a non-financial asset, so that means highest and best use policy should be there. So which will be governed by the Ind AS 13 only. How to measure the measure this the revaluation, or how to measure the fair value of the non-financial assets. So this is the choice of the particular industry, whether we want to go for the cost model or whether we want to go to the revaluation model. So once we choose this revaluation model, so standard says that on the simple terms, all items or all class of a particular assets will be revalued. So means if I am doing a revaluation of a property, plant and equipment, all items, all assets relating to the property, plant and equipment will get revalued under the revaluation model. You can't pick and choose as per your own choice. Okay, particular machinery I want to do in a revaluation model, and the particular machinery I want to do under the cost model. No, that is not allowed. Entire class of a particular assets will get recognized or will get revalued under the revaluation model. So that means entire class we need to consider. And the main thing is that once you decide that you want to do the revaluation accounting, you need to ensure that the revaluation should be done on the regularity basis. Regularity basis means that there is no any major difference between the carrying value and the fair value. The term has not been defined what is meant by regularity. Regularity could be 1 year or 2 years, right? So, but it should be on the year-to-year basis. But revaluation will be allowed only and only when the fair value can be measured on the reliable basis. So that means you can rely or you can measure your fair value under the revaluation model on the reliable basis. So two models, cost model or revaluation model, right? So how to do the accounting or how to do the thing we have already covered, but how to present the things on the cost model side or on the revaluation model sides. So If we are measuring under the cost model, so that means whatever the cost, less depreciation and less impairment, so that will be your carrying value. On the same terms, under the revaluation model as well, the the cost will get replaced by the fair value, and we have to calculate the depreciation, and we have to calculate the impairment loss, if any. So impairment will be covered under this Ind AS 36, which is the impairment of assets accounting. Now let's take a very simple case study. So on the cost model side as well as on the revaluation model side. So suppose A acquired a building for $5 lakh, right? So building is being depreciated on SLM, means straight line basis. The useful life is 10 years. Assume the residual value is nil and ignore the land element. On 1st January 2005, entity A sold the building for 4,30,000. Right? So how to do the accounting under the cost model? Very simple term and very basic question. Very basic case study, I can say that. $5 lakh is my assets, the cost, right? And I'm doing this straight lining method. So useful life is 10 years. So that means on simple terms, I can say that 50,000 I have to depreciate per year basis. So 2 year down the line, 2 year down the line, I have sold the particular building. So that means my carrying value would be 50,000 multiplied by 2, means that 1 lakh depreciation I will charge in my books of account. So that means 4 lakh would be my cost. Sorry, we can say that the carrying value in our books of account. 1 lakh minus 5 lakh minus 1 lakh accumulated depreciation, 4 lakh would be there, and I have sold the building for 4,30,000. So that means my machinery cost carrying value is 4 lakh. I am selling this machinery for $4,30,000. So that means this 30,000 is my gain on disposal, right? So this is my we can say that profit on the selling of the building or property, plant and equipment. So this is the very cost model. We are using this on day-to-day life. So now come to the next side, which is a bit complicated as compared to the cost model, revaluation model. So revaluation means you are doing the fair valuation, and the fair valuation means as per the Ind AS 13. So that means, suppose if there is any upward revaluation, 1,000 my book value, and you have revalued to 1,300, means there's a up in the revaluation part. Standard says that whenever there's a up in the revaluation, and while applying this revaluation model, the same will be part of your OCI, means other comprehensive income, and this OCI and accumulated under the head of the revaluation surplus under the statement of change in equity, right? So whenever there's a up, that can be part of OCI and will be parked under the statement of change in equity under the head revaluation surplus. Now come to the flip side. Whenever there's a dip in the revaluation, simply park to the P&L. As simple as that. 1,000 my value. Now after revaluation, it gone down to 800. 200 is the difference which will be parked under the P&L part. As simple as that. Now come to the more complicated side. So suppose there's a still upward, there's a up in the revaluation. That revaluation, up revaluation, can be part of my P&L or not? The answer is yes. So suppose there is a upward in the revaluation in this year, but in the previous year there was a decrease in the revaluation. So decrease will be part of P&L, right? So that means in the previous it will be part of P&L. Now there is an increase. The standard says that to the extent we have treated under the P&L, that can be routed to the P&L, and the rest of the amount will be part of my OCI. So I can explain you in the next slide through the practical example or through the case study how to do the accounting of this revaluation, right? Now there is a decrease in the revaluation, that can be. So suppose 1,000 revaluation reserve is already lying. Now in this year there's a dip of 200. So that means this OCI will get decreased by 200, right? So whenever there is a up, it will be part of OCI. Whenever there's a dip, it will be part of P&L. But we have to see if there is any previous revaluation and the same will be part of P&L. If yes, up to that amount that can be treated through the P&L and rest of the amount can be treated through the OCI as well. This revaluation reserve will never be classified to the P&L on the disposal or onto the derecognition part. So that means as and when there is a disposal or the derecognition of an assets, the revaluation reserve can be part of the retained earning directly rather than reclassification to the P&L part. That we need to keep in our mind, right? We have to check the company law compliances as well, or the statutory compliances as well. That means the statutory reserves are not free reserves, so that means through which dividend can't be declared, right? So the same thing we need to keep in our mind. So now let's take very simple example of this revaluation model. A company revalued their land from $2 lakh to $3 lakh. So that means there is up of $1 lakh, right? Previously, the same land had been revalued downward from 2,60,000 to 2 lakh. So that means in earlier years, we have revalued our land and there was a dip of $60,000. So that means through this slide, we can simply say that whenever there is a dip, it can be part of P&L. So now, in earlier years, we have simply parked $60,000 in our P&L part. But in the current year, there's an increase of $1 lakh. So that means $2 lakh to $3 lakh. There's an up of $1 lakh. The accounting would be to the extent of $60,000, whatever the amount we have parked under the P&L in the previous years, that can be recovered through the P&L as well. So that means 60,000 would get credited in the P&L, and the rest of the amount means 1 lakh minus 60,000 will be part of my OCI, and the same will be part of my revaluation reserve, right? On simple basis, we can say that this revaluation model will work. So now come to the another part of the depreciation. What is the depreciation? So depreciation is the systematic allocation of the depreciable amount of an assets over its useful life. So that means we need to know about the depreciable amount and the useful life, right? So what is the depreciable amount? Depreciable amount is the cost of an assets or other assets substituted for the cost less its residual value. So that means cost minus residual value divided by number of years, or the useful life. We can say that would be my depreciation. What is the residual value? Now the question is, what is the residual value? Residual value means amount obtained from the disposal of the assets, right, after deducting the estimated cost of disposal. So residual value has been defined under the company law as well. So that means you can't take more than 5%. So on simple basis, you need to apply Schedule 2 of the Companies Act 2013 while doing the depreciation accounting, right? So another thing is, what is the useful life? Because for the depreciation, we need to calculate the useful life. 5 years, 4 years, 3 years. So that means the useful life means the period over which an asset is expected to be available for use by an entity, or the number of production or similar units expected to be obtained from the assets by the entity. So that means the useful life, we need to have an idea over the what period of time the assets can be usable. So that means my usable life. But for the Company Act, because the standard says that you need to calculate your own useful life, so that means my useful life can be 4 years, 5 years, 10 years. But the Companies Act will says that you need to take those useful life as the residual value. So now the question is, which value we need to take? This Schedule 2 of the Companies Act says that if you want to change or want to take the some others useful life or the residual value, then you need to disclose in your notes to accounts with the technical advice that why our value or why our useful life is different from the life which has been specified under the Companies Act. But most of the companies are taking the useful life of the which has been given under the Companies Act. If not, they have to give the technical advice that in the notes that we are taking this much residual value and the useful life, because this will be applicable for depend upon the industry to industry. So depreciation means the systematic allocation, depreciable amounts and useful life. Depreciable amount means the cost of an asset or the substitute assets less its residual value. Residual value can be taken, or the useful life can be taken from the schedule 2, or if you are having there your own residual value useful life, then you need to give the justification with the technical part and give the disclosure in your notes to accounts part. So depreciation charge should be part of your P&L, right? Should be part of P&L unless until it can be capitalized under the cost of the assets. Suppose if you are using a particular assets for the manufacturing of a particular building or for the construction of a particular building, so that depreciation can be added, right? Else otherwise it can be part of your P&L. So you have to calculate the depreciation if you are doing your revaluation model or the fair valuation model. You can't escape that I'm doing the fair valuation and my fair valuation is more than the carrying value. I can't calculate the depreciation. The standard says that you have to calculate the depreciation. You can't negate it. The third thing is that, which is very, very important, and which can be seen through the COVID scenario as well. So depreciation doesn't cease when the assets become idle or is retired from active use, unless the assets was fully depreciated. So when the lockdown was announced in the last week of March, so most of the we can't say the most, all the manufacturing plants became idle. So there was a question that whether the depreciation we need to charge or not, because till Q1 all the assets will get idle, because the standard says that you can't escape or you can't deny that the assets are idle, we can't charge the depreciation. You have to charge the depreciation, and there was the guidance or the clarification issued by the institute during the COVID times that this is not a justification that the plant will become idle and we can't charge the depreciation. You have to charge the depreciation in your books of account. So depreciation methods. So 3 method has been defined. Straight line means consistent charge of depreciable amount over the period of time. For each year, we can say that. Reducing balance means there will be reduction of the charge over the period of time. Initial years it will be high, then low, then low, then low. In simple terms, we can say that's the WDV, written down value method. Unit of production method means whenever you will do the production, on that basis you will charge the depreciation. So the standard says that you have to review the depreciable method useful life, right, for the periodical basis, annual basis. Whenever there is any indication that you need to change those methods or you need to change the useful life, that will be part of change in accounting estimate rather than change in accounting policies. The current standard, the IGAAP, or we can say that in IGAAP AS10, whenever there's change in the method of accounting, it is simply be part of the change in accounting policy. So that means you need to calculate the depreciation on retrospective basis. So that is a major change, right? So in Ind AS, it will be part of accounting estimate, which has been given under the Ind AS 8. So the Ind AS 8 says that whenever there is a change in the estimate, it will be calculated on the prospective basis rather than the retrospective basis. But under this Ind AS, it will be part of change in accounting policy, and whenever there is a change in accounting policy, it can be calculated on the retrospective basis. So that is a very major change under the Ind AS as well as the IGAAP part is concerned. Right, so there's a one case study, very, very basic thing, how to calculate the depreciation on simple basis. So suppose the entity has purchased a new aircraft for 1 crore and they want to design for 20 years. But entity A has a policy of selling the aircraft after 5 years, right? So fair valuation has been given, means the residual value has been given, and the intention to have the assets means 5 years has been given. So that means my intention is that although the life is 20 years, but my intention is that I want to use that assets for 5 years only. So that means I can charge the depreciation for 5 years life, as simple as that. So depreciation change in useful life means, as I have already explained, that whenever there's a change in the accounting estimate, that can be treated to the accounting prospectively rather than the retrospective basis. So suppose there was 8 years life, now you are saying that 4 years life would remain same. So whatever the balance would be there, you need to calculate it and charge prospectively in your books of account. Component accounting, right? So component accounting means that each part of an item of the PPE with their cost that is significant in relation to the total cost of an item shall be depreciated separately. So that means in our previous slides, like in case of the spare parts or in case of the replacement or the major inspection, So suppose 3 years, every 3 years we need to replace a particular item of a machinery. So that means we need to calculate the life of that item, and we need to charge the depreciation separately. So that is called, so this is called the component of accounting. Or in case of the aircraft or a ship, suppose the value is 1 crore, and the if we can define that, okay, for a particular ship, there are the three major items which they are having a separate useful life. So we can calculate this depreciation separately for the component of the accounting part. So that means the ship or the aircraft part. In the erstwhile part, right, in the case of the IGAP, although the same has been given, but it's not mandatory, it is a recommendatory. However, the same part was been given under the Companies Act 2030. The company need to do the componentization of accounting, but it's a mandatory under this Ind AS part, right? So whenever there's a significant cost of a particular item, that need to be capitalized and need to be depreciated separately. So now let's take one very basic example of a ship. Suppose the ship value is 20 lakh, and it has, the management has identified various components, means the superstructural, engine, and other equipment part. Useful life has been identified, means for the hull and the superstructure, the useful life is 40 years, engine is 20 years, another mechanical equipment is 10 years. 20 lakh value has been given, and the proportionate value can be defined for the each and every part, means hull, engine, and other equipment part. So we can charge the depreciation, for each part, because these are the significant part, means hull, engine, other mechanical equipment. So we can identify, or we can allocate the cost first, and then after the taking the useful life, which has been given in the question, that 40 years, 20 years, 10 years, because the useful life is different, we can charge the depreciation accordingly. Whereas in the IGAP, the same can be part of the main assets, so it can be depreciated under the head of the main assets accounting. So that's the major change. Derecognition. Derecognition means the property, plant, and equipment, or the assets will be derecognized when on the disposal, or when there is no future economic benefits are expected from the use of the assets, right? So in the previous slide, we have done one case study wherein we have applied the cost model and calculated the gain on sale of the assets. So same thing we can apply on the derecognition principle as well. So gain and loss, how would we calculate it? Cost minus the net proceeds. Cost means, sorry, carrying value means the book value minus the accumulated depreciation or the impairment loss, whatever the value would be there, and the net proceeds, the difference will be taken into the P&L part, and the gain and loss will never be classified under this revenue part, which is being governed under the Ind AS 115. Now come to the disclosures part, right? So this is the last one. Under the disclosures, so various disclosures has been given, but we will discuss some key part, right? The measurement basis used while doing this PP, we need to disclose depreciation methods, useful life, depreciation rates, gross carrying amount, accumulated depreciation at the beginning and at the end. So we need to do the reconciliation. What are the value of the opening part, means 1st April 2019, what are the additions, what are the deductions, right? So we need to do the reconciliation. And other disclosures means we need to do, is there any restriction on the title? If we are having a property but there is some restrictions, we can't use it, or the title are not transferred, or is there any PP which has been pledged to the bank for the borrowing part, we need to disclose it. Expenditure recognized in the carrying amount of PP in the course of construction, contractual commitments, compensation for the third parties, whether depreciation was recognized in profit and loss as part of the cost of other assets in the period, right? So same thing, and the information on the revaluation, how the revaluation was done, what are the qualification of the valuer. We need to mention each and everything, right? But these are the basic disclosures we need to given in our books of account. Now come to the last slide of this Ind AS versus AS difference. Although we have discussed in our previous slides, but I have summarized into the two slides. So there are the major differences, but we can discuss some major key difference between these two, Ind AS 116 and AS 10. So change in the method of depreciation. So Ind AS says that whenever there is a change in the method of depreciation, that can be part of the change in estimate, and the same can be calculated prospectively. Whereas AS says that it will be part of the change in accounting policy that can be taken care of through retrospectively basis, from the previous years. The next is reviewing residual value. Residual value must be reviewed at the end of every financial year, right? So if there is any change the same will be part of you change in the estimate. But AS10 estimates with respect to residual value are not required. Means you can't do the reviewing the residual value on each and every year basis. But Ind AS 16 says that periodically you need to review for this residual value and the useful life for the each and every financial year. Frequency of revaluations. When you apply this revaluation model under this Ind AS 16, it says that revaluation need to be done on the regularity basis, right? So regularity means there will be no any significant change between the carrying value and the fair value, but there is no any guidance available under this Ind AS 10 part. Reassessing the useful life, right? So the same thing we can discuss with the reviewing the residual value and reviewing the useful life. So the same can be clubbed under the one point. Under Ind AS 16, it can be through prospectively if there is any change. Under this AS10, it can be done through the retrospective basis if there's any change. Cost of major inspections or cost of replacement, it can be capitalized under this Ind AS 16. Ind AS 16, whereas under this AS 10, the same can be part of the major, same can be part of the expenses part. Componentization of accounting, it's mandatory, but it was not mandatory under this AS 10. So that was a very basic differences between this Ind AS and AS. So now I have done with my session. So if there's any questions, I will be more than happy to take it.
Thank you so much, sir, Anil sir, for this such a nice deliberation on this India's 16 topic, and you have actually shared so much knowledge with us on this India's topic. So, Ankit sir, you have some query regarding the India's 16, right? So it would be great if you can discuss that with Anil sir.
Okay. Thank you so much, Ajay sir, for such session. I have a like small query, like you discussed about if we do component-based accounting in Ind AS 116, then it is allowed. And like you said, in the Companies Act, there is a specific life defined on that. So if we follow component-based accounting, then would it be allowed under Companies Act? Do we need to give any technical justification for that?
Yes, for this componentization as well. Suppose in case of that was available under the IGAP as well, because most of the manufacturing sector are already doing this component accounting in the Companies Act as well. But now what has changed is that they have defined the useful life. Under the IGAP, there was a maximum limit which has been defined, which there was a minimum and the maximum useful life. There's no any criteria of minimum and maximum life. Means you can't take the useful life beyond the maximum life which has been defined under this Companies Act, under the IGAP is concerned. But under the Ind AS, there is no concept of minimum and the maximum life. If there is any change in the useful life, either up or on the downside, you need to mention in your notes to come. You need to mention it, right? And in case of the spare parts, or in case of the same thing part, the spare part will not be defined under this Companies Act, right? So
Yeah.
normally company, in general basis, normally company doesn't define any policy or any particular useful life for the spare parts or the useful life, spare parts or the replacement parts or for their useful life in the notes to accounts. They generally mention the major cost, major life, which has been defined under the Companies Act. Like building, suppose my useful life is 60 years, I want to take to the life for the 30 years. I need to mention the technical justification why I am taking the 30 years, 40 years, 50 years, or 62 years. Right?
Okay, and even for the like the example you have given for shipping, wherein we are following component-based accounting, so that technical justification also to be given in the notes.
Yes, that technical justification we need to give in our notes to accounts. You can refer many big financial statements, like in the case of the Tata or in case of the Reliance. So you can see that 3 or 4 items, they have justified why we are taking the building for 40 years rather than the 60 years or 50 years, which has been defined under this Companies Act. So most of the companies, like in the which are listed as in the NSE or the BSE, they are taking their useful life as per their own, and with the technical expertise, they have defined their useful life and giving the disclosure in the notes to accounts.
Okay, got it. Thank you, sir.
Anil sir, when we are talking about
Yes,
that technical justification, technical advice, So this is the company's internal statement. Company will be having some technical experts relating to machinery or some
Yes.
items, or
See,
this
see,
is
see, just
outside advice.
see, as Ankit have already discussed under this Ind AS fair valuation part, fair valuation standard, the fair valuation will be done by the valuer, right? So we have to mention the whatever the fair value or the useful
Right.
life that has been done by the fair valuer, means the technical experts, because this fair valuation of this property, plant and equipment can't be done by CAs or other
Accountant.
things. They need to be done by the valuer as well, right? So these are the engineer people or the technical people who will take the assessment of how what would be the useful life of particular assets. So that can be taken by the company. Technical advice could be your internal, means uh, my internal team can assess that okay, the 60 years, 40 years, but that can't be justified. It can be through the external part only. That will be more on the justification side.
So as far as Ind AS is concerned, they have not mentioned about something like technical advice has to be
The
referred to
company,
the.
the Companies Act Schedule 2 has mentioned that if you want to take the useful life which is different than which whatever is specified under the Schedule 2, you need to mention in your notes to accounts, because Ind AS has specified that this is your useful life. You have to assess the useful life, right? But in the India there is a statutory law, Companies Act. So that means all depreciation you have to calculate the Companies Act as well. So that means there is some contradiction. Means you are taking your valuation or you are taking your useful life 5 years. Companies Act says that no, this is a useful life for 10 years. And this India says that you need to make the disclosures, useful life, depreciation method. So that means there's some contradictory. So whenever there's a contradictory, statute will prevail over the accounting standards. So
Right.
Companies Act that in Schedule 2 says that you need to mention whenever there's a change or whenever you are taking some different useful life or different value as compared to your Ind AS, you need to mention those things. So Companies Act Schedule 2 has mentioned that.
Okay, right.
Yeah.
Anil sir, there is a query from viewers. I'm displaying the query. And query is residual life of an asset, how it will help in evaluation of machinery.
See, the useful life could be your 5 years, 7 years, 8 years. It depends upon company to company. So whenever there's a valuation, whenever there's a life, it will ultimately impact your valuation. Valuation means when you do the fair valuation of accounting, not the cost model, right? So cost model means whatever the value would be there, you would have to calculate in and you have to calculate the depreciation. So yes, when you do the fair valuation accounting, it will ultimately impact it.
So, sir, we don't have any further query. So, I think we can
Okay.
conclude this session. And thank you so much, Anil sir. Thank you so much, Ankit sir, for sharing the valuable information and valuable knowledge on Ind AS. So, thank you so much, viewers, for staying with us on this webinar. We will have the next webinar soon on Team CASA channel. Thank you so much for watching today's webinar.
Thank you.
Okay. Thank you. Thank you
Okay.
very much. Yeah.
Thank you.
Thank you.
Thank you to all.
Thank you very much.